This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Bloomberg Surveillance across the nation, worldwide on YouTube. Subscribe to Bloomberg Podcast. Search Bloomberg Podcast. I'll get on the live chat here in a moment. We say good morning after a really sensational day yesterday. The Sweeney bull market in place. Dow closing 39,908.
Whoa.
Paul, today could be the day.
Yep, absolutely. I'm looking at the pre-market trading. We've got 40,065 here. So some Walmart numbers, Tom, crossing the tape. Walmart first quarter adjusted EPS 60 cents. Consensus was 53 cents there.
Yeah, the headline comes out, Walmart sales surge as higher income shoppers flock to retailer. It says right here, everyone but Mateo shops at Walmart. She's over at Costco. But actually good numbers, and you see an indication in the stock, $59.83 in a close. And we're up a good solid stick right now. So even more, $61.10 on Walmart. Paul, help me here. I'm searching for growth. Sales growth, 3 to 4%.
Yeah, and so they see fiscal year net sales at high end are slightly above 3 to 4%. So I think folks are feeling pretty good about that. Yeah. Revenue for the quarter came in slightly better than expectations. Sam's Club, I know that's big for you. Sales ex-gas up 4.4%. Estimate was 3.3%. So it looks like on the revenue side, Tom, company came in a little bit better than expected, and that dropped down to the EPS line.
Solid performer over the last 10 years. Walmart giving you 11% per year. Certainly pretty doing solid. A value add-on from bonds and what nominal GDP is doing. Jeff, for you coming up here in a moment, we'll focus on the real yield. Boy, did that shift yesterday. What does that signal? We'll talk to Jeff Yu about this. We're on Apple CarPlay. We're on Android Play again on YouTube from the Interactive Broker Studios with our Bloomberg Business Flash, Lisa Mateo.
And you got it. Since you mentioned Walmart, let's check in with them right now. They are up about 1% at this point after boosting that strong revenue growth. So you see the strength there. We'll head over to Deere right now, world's largest farm machine maker. They're down 5%. Reduced profit outlook for the year. That was due to declining agriculture income. And then, yes, we'll check in with the meme stock craze, which is losing more steam. GameStop down 14%, AMC down 12%, putting the stock on track for a second consecutive session of losses. Over to the markets now. Futures, they are starting to show some gains right now after the measure of underlying inflation. Well, that helped. It cooled in April for the first time in 6 months, but it might not be enough for Minneapolis Fed President Neil Kashkari. He's saying interest rates are likely to be on hold, quote, for a while longer. So we have NASDAQ futures up about 0.1%. Dow and S&P futures are little change right now. To the bond market, the 2-year yield at 4.74%. That's up 1 basis point. The 10-year yield at 4.33%, and that is little change. That is your Bloomberg Business Flash. Tom and Paul.
Right to it. Senior EMA market strategist, BNY Mellon, Jeff for you joins us. Just fabulous on the cross-asset view. Jeff, I look at the Bloomberg Launchpad, and without question, the number that matters is the real yield yesterday broke out of its range. The inflation-adjusted 10-year yield, roughly 205 to 218, is now a 202 this morning. What is the significance of the real yield pulling in yesterday?
Well, it really depends on, which asset class you're looking at, but broadly, lower real yields. If you actually believe in that, then it's positive for financial conditions, markets like that. If you have a reversal, then it goes the other way around. But with my FX hat on, it's less about the absolute level of the dollar real yield. It's relative. So 1% front end, 2% if you deflate using another way. How does that compare to, let's say, 5-6% if you just go south of the border in Mexico, for example? So I want to know, let's say, for every 100 basis points in the dollar real yield, how much is that worth elsewhere? Because right now it's still a lot. You can have higher real yields in Latin America in particular. Right. No one's going there. They'd rather have the dollar with 1 or 200% real, with 1 or 200 basis points.
Is the power here that Jerome Powell is central banker to the world then?
Well, so many would say it's exorbitant privilege, but yes, look at how many central banks have hiked rates, surprisingly, like Indonesia, a darling of Asia. They had to hike recently, surprisingly, citing Jerome Powell. Mexico, and Brazil, they've either stopped or slowed their paths. No more 100 basis point cuts, down to 25 or unchanged, citing the Fed as well, right? So you look at Sweden, for example, they've cut rates, but are they talking about the ECB? No, they're not. They're talking about the Fed. So yes, you are right on that.
So, Jeffrey, what do you expect the Bank of England, what do you expect the ECB to do? Are they going to wait for this Fed? Because this Fed may be a little bit more patient than some of our European banks.
So the ECB have been clear, so that they are not an offshoot of the Fed. They will go with their own independent monetary policy, right? So they will start cutting rates in June. There will be some divergence, and I think they will cut more than markets expect. Bank of England, I'm still on the side of maybe acting a little bit later. I'm in August, but that a lot of that will depend on the next two inflation numbers, as Governor Bailey has highlighted. UK, US are in a position to hold on a bit and say, we can diverge. We'll act according to our own circumstances. But for much of the rest of the world, especially in Asia and Latin America, no, they will follow the Fed because they have to. And they openly admit it.
Jeffrey, when you talk to your institutional investor clients around the world, you talk to them about Europe, about the Middle East, about Africa. What are the biggest areas of interest from your clients these days?
So they are looking for diversification. They are looking for alternatives, right? But as we have stated earlier, dollar cash yields, nominal and real yields, are just still too high for them to go to other places. We are getting questions about this China stock rally, especially if the PBOC is tinkering with QE in their own style. So, that's a whole other discussion. But, people are looking to diversify, especially you want to move into other assets when the dollar is strong. And that's where the valuations really start to come in. Right?
Jeff, I've never asked you this question. I apologize. Dumb question of the morning. Do foreigners want to buy American stocks? Is there a general, with your work at UBS and now at BNY Mellon, is there a general predilection that the West and Asia want to buy the Dow Jones Industrial Average?
Right. So they want to own U.S. exposure. And much of that does mean U.S. stocks right now. But is it because they want to after rigorous financial analyses with valuations, or is it there is no alternative story because returns there have just been so high? You want to be in China, but look at the Chinese 10-year yield, right? It's all like half the level of the U.S. side of things. So even notwithstanding geopolitics, there's a lot of interest there as well. So I think there's more towards there is no alternative story for US assets, but US tech, US productivity, that's a genuine preference because looking at the evidence, that's where the growth and the innovation and the productivity is. If I had to distill things down to one word, it's productivity growth, and that's where the US is still well ahead because of tech and because of education and all of those structural advantages built up, not over the last 1 or 2 years, but built up over the last decades.
So does that mean, is there a bear case for the US dollar under that scenario?
So I'd say the bear case for the US dollar, I always ask against which currency, right? Bear case against the yen, absolutely, right? Because a yen is just tremendously undervalued right now. And I can say the same for many savings-heavy funding currencies within APAC. But I'm still looking for euro dollar, for example, to move back to parity at some point because Europe's structural advantages are no longer in place, right? So I think the market's still underpricing how low the euro can go, and also ECB easing. So that's where there's a bull case for the dollar. Sterling range bound. So it really depends against what.
This is critical, folks. This is such a bold call by Jeffrey Yu. To be clear here, the euro is going to weaken from a 107.8 down to 1.00 or even 0.99. What will be the catalyst for that?
I think the catalyst will be two things. One, the realization of the Eurozone that the manufacturing industry really needs support. It's been contracting for almost 2 years at this point. The S&P report recently with the PMIs called European manufacturing bleak. That was the word that it used. And, trade relations with China, they're not in the best places either right now. So that is the structural shift that it needs to come. And also for financial conditions, look at the lending surveys. It's contracting. The net interest margins are not benefiting Eurozone banks anymore. Financial conditions are too tight, and competitor manufacturing competitiveness, that is an issue as well. So you need comprehensive easing, and because of the dollar's unique status, the US financial conditions are far less exposed to the strength or weakness of the dollar as opposed to where the euro is. So it needs to be part of the package.
Huge brief. We got to do this like once a week. It's Jeff Yu on 7 a.m. It works.
Yeah,
I mean,
fine.
it's just great. BNY Mellon, Jeff Yu, thank you so much for that. Walmart off earnings up 5%. With our news in New York City, here's Michael Barr.
Thank you very kindly, Tom, Paul, and Lisa. In Beijing,
75年来，中俄两国携手走出了一条
Chinese leader Xi Jinping is meeting with Russian President Vladimir Putin. The two held a joint press conference. Putin thanked Xi for his work trying to resolve the war in Ukraine, and Xi expressed hope for peace in Europe. Meanwhile, Ukrainian President Volodymyr Zelensky says the delay in U.S. aid to Ukraine has had a direct impact on the war along the northeastern border. Russia is now pushing towards Ukraine's second largest city, Kharkiv. Zelensky says defenders are struggling with a shortage of ammunition.
Now we are speaking about surviving because of the big deficit of ammunition. It's about surviving.
Zelensky spoke with ABC. Slovakia's head of state is expected to survive after an assassination attempt. Prime Minister Robert Fico was shot 5 times as he greeted a small crowd yesterday. President Biden and former President Trump have agreed to battle it out on the debate stage. The two presumptive nominees have agreed to take part in 2 debates, one in June on CNN and the other in September on ABC. Meanwhile, Trump will be in a courtroom today as his hush money trial continues in New York. The prosecution's star witness will once again be grilled by Trump's defense team. We get the latest from Bloomberg law host June Grasso in New York.
Michael Cohen will be back on the witness stand today for more cross-examination by Trump's attorney, who will continue to attack his credibility. Cohen is the prosecution's final witness. Trial is not in session tomorrow because Trump is attending his son's high school graduation. The defense has not yet said whether they'll put on a case or whether Trump will take the witness stand in his own defense. In New York, June Grasso, Bloomberg Radio.
And finally in golf, round 1 of the PGA Championship begins in just minutes. We will broadcast live play-by-play after the U.S. markets close right here on Bloomberg Radio. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Overnight, away from the headlines on this great bull market, the real yield moving, Walmart earnings and that. Amazon, to be clear here, Amazon is not going to buy Paramount, but they're going to dance.
It's maybe. I mean, we got some reporting here. Paramount Global has had conversations with Amazon about expanding the ties between their media businesses.
Okay.
So maybe just doing a little bit more, maybe on the streaming side, maybe on a content side. We'll have to see.
Moi, cynical.
Yep.
Is there anyone not looking at Paramount?
But the problem is nobody's breaking out their checkbook. Nobody. And so this
Why?
thing has been in place. I have
Why?
no idea. I was just telling Alex Steele, 5 years ago I could have sold this company with 3 phone calls. Now you can't give it away. I'm not sure what's going on.
With the pullback in music copyright,
Yep.
the copyright values don't seem to be what they were hoping for David Bowie and others years ago. It's maybe the vaunted Paramount catalog, could I dare say, not worth what they think it's worth?
Maybe, but I think what's hurting this deal is you have Sherry Redstone in her control stock, and the question is, how do you structure a deal that is fair to all shareholders? That, I think, is the biggest problem here for getting a deal done, aside from valuation.
We're trying to get it done this weekend.
Exactly, we'll work on it.
See what can happen there. What an extraordinary set of days. Our team has put together a great list of people. To start strong with Jeff Yu this morning is wonderful. Paul Sankey on oil will join Constance Hunter. Perfect time to speak to Lakshman Achuthan of ECRI on America and all going on there. Again, Walmart lifts big off earnings from New York City. Bloomberg surveillance. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. To the markets we go. And right now we've got green on the screen after record highs on Wall Street yesterday. The latest economic data really helped give those indexes a boost. Today we'll get some more of it. We'll get a read on U.S. housing starts, initial jobless claims, and also industrial production. All right, so we have NASDAQ futures up about a 0.1%, up about 28 points. And we have Dow futures, S&P futures, little change. We have Dow futures up about 31 points at 40,000. After the bond market, the 2-year yield at 4.74%. That's up 2 basis points, and the 10-year yield at 4.34%, and that is little change. To earnings we go. A little bit of a deeper dive into Wal-Mart. It came out just as we were starting our show, so it expects the full year to be slightly better than planned. The big drivers: e-commerce, grocery business, as well as more higher income shoppers that are looking for bargains. So those shares up about 5% right now. JD.com, ADR's up 3%. It slashed prices, ramped up shopper perks. And finally, Cisco Systems up 3%. It raised its full year revenue forecast. That is your Bloomberg Business Flash, Tom and Paul.
Is that Cisco the tech company or Cisco the food company? Okay, because I get them all confused.
Which is it?
The tech company, yeah.
Oh, okay.
Which is important because Cisco hasn't had a good day in I can't remember how long.
Well, Cisco does hot dogs at Fenway Park, or at least they used to. I mean, that's
I
bought something online at Walmart this week because I couldn't get it at Amazon. I couldn't get it here, couldn't get it there. Walmart to the rescue, and I guess that's what America's doing.
Yeah, absolutely.
All in all. My head's spinning here. First of all, we have Mr. Dimon in the 8 o'clock hour.
We do. Francine Lacroix, she's in Paris, which is exactly where you want
There's
Francine
a lot to talk to him about.
And there's a lot to talk to
Coming
him about.
off of what John Farrow did with Mr. Solomon and Mr. Moynihan.
Yep.
I mean, it's going to be interesting. On American banking, tune in to Bloomberg, to say the least. What an eclectic group of guests we've had in the blur of the last 3 days. Sweeney out front on Dow 40,000. We'll get there, folks. Patience. Joining us now, Constance Hunter. We're thrilled that she could join this morning. Constance, what changed yesterday? Just as simple. You're writing a single paragraph today to your clients. What changed?
Confirmation that inflation is still on its downward trajectory. That confidence was shaken about inflation when you got that data for the first 3 months of the year. Yesterday, it confirmed finally OER is starting to soften. Rent prices are starting to soften. It was a print that showed we are moving in the right direction, and we are going to get rate cuts this year.
You and Julia Coronado fight like cats and dogs at MacroPolicy Perspectives, but what's the distinction of your debate when you and Dr. Coronado speak?
So what we are debating is which comes first, right? Does inflation allow the Fed to cut rates because they see that trajectory to 2% clearly and they cut in time? Or are they behind the curve? Are we seeing softening in the labor market that ends up overtaking the story, whereby they end up being behind the curve? And that has really significant impact for whether that rate cut continues to fuel a bull market or not, whether what we see on the underlying economy, the shape of the curve. Two very different outcomes if they're before or behind the curve.
Paul, I saw an article on New Jersey real estate. I understand there's dynamics with mortgages. But the prices are up like double digit.
Yeah.
I mean, where's the slowdown?
Stuff's moving in Jersey, that's for sure. Whatever comes on the market. Constance, there's a lot of academics and market practitioners that Tom and I talk to that say the Fed's already behind. If you look at the real-time data, inflation's already done. They should be cutting now. What do you say to those folks?
I think they have a very good point. They have a very good point. The problem is, I mean, I was at Forecasters Club yesterday, and you would be surprised.
I wasn't invited.
There's a club for forecasters?
Yes.
Where do you guys meet?
Once again, you didn't invite me.
Anna Wong is the Bloomberg representative.
Oh, that's
I can't go.
Yeah.
Dr. Wong's there. You know, they don't let trash like me in. Sure. Keep it up, Constance.
In any case, you would be surprised how many people thought that the Fed doesn't need to cut, that the economy is strong. And it is this K-shaped economy again, which makes it very hard to interpret, right? If you're in the top part of the K, you think, wow, everything's great. My stocks are up. I'm getting interest on my savings and with no risk. The economy's doing really well. My house price is up. But if you're in that bottom part of the K, you're like, wow, my car insurance just went up, and I still need my car to drive to work, and I don't have the bandwidth to figure out how to push back on this or shop for a different insurance carrier that's going to give me the same coverage at a better rate, right?
Yep.
You're really under pressure if you're the bottom half of that K. That's what we saw in the New York Fed data that came out with regard to creeping up with delinquencies on credit cards, creeping up with delinquencies on auto loans. Mortgages are still low.
Yep.
That's obviously a very good thing, but
so we got, Walmart today put out some numbers which were a little bit better than expected, particularly on the top line. I always look at Walmart just as a neophyte as like a pretty good read on the consumer, but the consumer really is challenged, and it's that K-shaped recovery here. What happened? How did there's nothing really the Fed can do there, can it?
there is nothing the Fed can do there. I mean, well, I shouldn't say that.
But they're all.
But I shouldn't say that.
Okay.
Lower rates. So we have an inverted yield curve, which is obviously very problematic for banks, right? And banks. That's why we see such high spreads over 10 years on mortgages. Banks aren't as willing to lend. And so if we had a positive sloping yield curve, ergo the front part of the curve was lower, right? We would see more willingness to lend. We'd see easier monetary conditions for Main Street. What we see is easy monetary conditions for Wall Street. They're two different things.
Constance didn't say ergo till she started working with Julia Coronado. It's changed everything.
It has.
Okay, Atlanta GDP now is 4.2% real GDP, which we know is a fiction, and through the quarter it will come down. It came down to 3.8. Where's that statistic going to migrate down to as we stagger to June 30th?
Yeah, we're looking at something around at 2.2, 2.4%, most likely.
We call that okay.
That's that's if you think potential GDP is 1.8 or 2, that's a little better than okay, right? If you compound it 0.2% better than trend for months on end or quarters on end, that is a good thing.
Are all the gains with the stimulus and the financialization of our system, are all the gains going to the haves?
I don't know that that's the case. I think a lot of what we're seeing with the Inflation Reduction Act, the CHIPS Act, the infrastructure, is jobs to middle income people. We're seeing good jobs going out into the economy that are important. So I wouldn't say it's all going to the haves.
How about on that labor market? Still below 4% unemployment rate. I mean, is the labor market as strong as it seems on that headline kind of number?
So this is where we, again, have some concerns.
Yep.
So we do web scraping of earnings calls, and we monitor for intention to hire and intention to fire. And so what we're seeing is less labor hoarding, right? Firms don't feel the need to labor hoard anymore. They've deployed.
Which I never heard of before the last few years, by the way.
Well, it wasn't a thing before the last few years. It was because of the pandemic where companies couldn't get workers, that once things softened up a little, they're like, well, I don't want to lose. It's hard to hire. It's expensive. It's time consuming, right? Better to reduce people's hours and keep them on the payroll for when you're going to need them later than to go ahead and fire them. So we had labor hoarding as a reaction to the pandemic.
Constance,
but that's ending.
Okay. Yep. Constance, thank you. Constance Hunter with us. MacroPolicy Perspectives. Paul, I'm looking at Wal-Mart here.
Yeah.
And give me a percent, Rich, but I'm sorry, it's putting on a bid right now. We're at 59.84. And we're popping up to 62.33.
Yeah, it's about 4.2% here in the pre-market. We had been up at about almost 6% higher, but the market definitely likes it. And year to date before today, Tom, the stock was up almost 14% here. So this is a solid 20% move higher for a stock with almost a half a $1 trillion of valuation.
Well, how many? Go to the DES screen. I'm doing some math here.
Oh boy, look at you.
How does it? To go to the DES screen, how many employees do they have? It says it right there.
2.1 million.
2.1 million. They're all at the front door this morning greeting, right?
Yeah, I'll be there with them. That'll be when I'm done with this thing.
Okay, I'm looking at the pandemic bottom for Walmart, which basically, as you correctly state, is a Merca. Walmart, from February of 2020, the depths of $35 per share. It's up 79%, 15% per year versus a long-term trajectory of 10, 11%.
Tom's got a 1.4% dividend yield, Tom. You think they should raise that yield?
I noticed the dividend growth is pretty moldy.
Yeah.
They're not,
5 years net growth in dividends, 2.5%. It seems like you put me on the DES page, and that's got all the dividend information. DVD is the ticker, is the function.
We recommend subscribe. Get a Bloomberg terminal.
Yeah.
Perfect.
You can sound
for the
really
family
smart.
room. From New York City, Paul Sweeney, Tom Keene. This is Bloomberg Surveillance. Stay with us.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green in the screen as bets on Fed rate cuts grow. Now we're coming off a record day, so we'll check in NASDAQ, Dow, and S&P futures all up 0.1%. We have S&P futures at 5,339, Dow futures above 40,000, NASDAQ futures at 18,724. Over to the bond market, the 2-year yield at 4.75%, up 2 basis points. The 10-year yield at 4.34%, and that is little change. Quick check of commodities. We have spot gold is lower at $2,382 an ounce. Brent crude, $82 a barrel. WTI crude, $78 a barrel. Moving the markets, we'll start with Chubb. Their shares seeing a boost, up 8%. This is after Warren Buffett's Berkshire Hathaway unveiled a $6.7 billion stake in the insurer. And then companies making news, Microsoft. This is from the Wall Street Journal, saying the company has asked up to 800 of its cloud and AI employees in China to consider relocating to other countries. You know, those tensions rising between the U.S. and Beijing. Shares, though, are a little changed right now. And Toshiba plans to shrink its workforce in Japan by as many as 4,000 people this fiscal year as part of turnaround efforts. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Good morning, everyone. We're going to do something now. Focus on oil, which we really know. Usually we're talking copper now. Copper's cooler than oil. Paul Sankey joins now, just absolutely definitive in this linkage of oil economics into actually oil stocks. We'll try to cover all this here right now. Paul, just to get to the OPEC meeting, are you going to attend? Sometimes you do.
This time it might go virtual, actually, Tom. So,
okay.
And I wasn't prepared to commit to going, even though it's the European Cup final soccer that night, June the 1st. It's also a Saturday.
Okay, it gets complex. What's the power of OPEC now? All of us have a stereotype of two oil crises in the 70s, or this or that or the other. What's the power of OPEC right now?
Well, we wrote a new theory about this, which most people intuitively know, which is what really matters is not the call on OPEC, which is how people have calculated the oil market balance for years. We don't think that matters anymore as much at all as you're implying. We look at the call on U.S. unconventional because that's really the truly marginal short cycle oil. Now, of course, on top of that, you have the Saudis' willingness, we should say, everybody kind of has the ability to shut off production, but Saudis willing to shut off production in order to balance the market. And OPEC is really a construct for the Saudis to feel better about having to carry the market. So what they're trying to do is corral everyone else, even though in some cases, and the obvious example is Russia, what they say is more or less meaningless, is that, I won't go further than that, but it's not reliable what they say essentially, which must be very frustrating to the Saudis. But essentially, it is a Saudi construct in order for them to feel better about holding production off the market.
Paul, what is driving the oil price these days? Is it supply? Is it demand? Does one end of that equation kind of have a little bit more sway these days?
Well, Tom and I have been talking for 20 years. In fact, I'm surprised he didn't do his usual thing of hammering me for a terrible call that me and Adam Szymanski made about Russia. I think it was in the year like 2003.
That call was so bad. That call was so bad. Brezhnev aged. I'm sorry. Brezhnev aged when you made that call. Continue, Dr. Sankey.
No, I think the big thing, which is really remarkable to me in the context of that history, is that we're at all-time high oil market demand. So demand is at an all-time high. And if you'd asked me, do I think oil demand will be at 102 million barrels a day? 1,200 barrels a second in 2024? I would have thought you were crazy, but here we are. And so the demand side is truly remarkable. Now, of course, it's all about what happens at the margin, and demand is clearly weakening. So demand is good, but not growing strongly at a record high. What's additionally absolutely remarkable, and 20 years ago we would never have guessed this, was that you'd have too much supply. And so, as you know, there's arguably 4 million barrels a day of spare capacity in OPEC. And of course, we have the US as the dominant energy producer in the world. And, people still don't understand what an enormous deal that has been for everything that happens in the world, geopolitics, the dollar, you name it. The US performance here in oil and gas has been truly stunning. And the good news is that the companies have really improved themselves. They really are strong. I don't think I've seen Exxon in better shape in that 20-year period. They really are doing a remarkable job. And they're not alone. You know, a company like Conoco, Chevron, really good stuff.
So in that context, Paul, how does the U.S. and those big producers you were just mentioning in the U.S., what's the interplay between them and OPEC in terms of shaping global oil supply?
Well, you know, it's been controversial because obviously you saw that the FTC wouldn't allow Scott Sheffield on the board of Exxon.
Yep.
Because of concerns about that. And I think, frankly, they were simply naive. The major US CEOs at times, they didn't, you know, we had covered refining for 20 years and I would host refining managements. They wouldn't be in the same room as each other because they didn't want to be, you know, accused of anything by inappropriate in terms of managing the market. But of course, the E&P guys had never had any market power up to the unconventional revolution. And when we got to too much supply, they began to talk a lot to OPEC. And that at a headline level, it was actually quite innocent. But at a headline level, at an FTC level, it looks pretty bad, to be honest with you. It just doesn't look good. And so there has been some worries about that. But broadly speaking, the key issue is the behavior of the marginal US producer, who is showing capital discipline. And so US production growth has slowed and may even go into decline depending on where the oil price is. And we think that's because Saudi can't cut any more, essentially. We think that demand weakness will ultimately cause, you know, prices that force US producers to produce less. And that's to me is the dynamic. Hence our call CUSP. The call on US unconventional is actually the important measure here, not the call on OPEC.
Is big oil in America, off your Exxon comments in the moonshot from the pandemic? And Sankey, I'm looking at Chevron right now. I got the same attribute pretty much. But is it a new big oil where you're looking at double-digit returns versus single-digit mediocrity?
Yeah, no, that's exactly right, Tom. They're in the double digits, and we always thought they could get there with capital discipline. Of course, you need oil above 70. We're at 80. So this is a good environment. The other thing that we're highlighting is that actually, believe it or not, there's lower oil volatility. I know it doesn't sound like it, but actually oil volatility is falling, and that's very good for the multiples of these stocks because you know, investors obviously get very nervous about a highly volatile commodity and whether or not to buy the equities. What you'll notice is that we've held what we thought would be the range, which is essentially 70 WTI, 75 Brent to 85 WTI, 90 Brent. And we've held that range quite well. I'm very hopeful that we will continue to hold it. But of course, that's dependent on this OPEC meeting that we started with, because we do need Saudi to keep holding at least 1 million barrels a day off the market in order to keep it balanced. In the past, as you know, COVID particularly, we saw a market share war amongst OPEC. And that could be, you know, that could be majorly volatile for oil, which would be volatile to the downside if we get into that. But nobody's expecting that right now. The consensus is that we'll get a rollover on June 1st, and they may just do the meeting virtually in order to achieve that. They often do it if they want to avoid the press. And I think that's what will happen. If it doesn't, I don't think they can cut more. The problem with the OPEC meeting is there's only really downside here.
Paul, XOI, Paul Sweeney, XOI, off the pandemic gloom, up 320%, 41% per year. That's the Sankey move.
That is the Sankey move. Hey, Paul, if I'm a big global oil energy company, am I still out there looking for oil out in the ocean or out in the middle of nowhere, or am I just going to go buy a company?
You're looking because we, you know, incredibly, this is the other thing about the supply side is it's not just about unlocking the Permian. What we've seen here, as you know, is Guyana has been a remarkable discovery. And we didn't think, you know, the peak oil argument of the 2000s that Tom and I used to talk about has really just become completely discredited, and Guyana's huge. But then if you look at Namibia looks bigger. And if you look at a company like Portugal's Galp or Total or Shell, they're finding another Guyana might even be bigger than Guyana offshore Namibia. So there's definitely a resurgence of offshore activity because the Permian is getting more marginal in terms of its economics. You've drilled the good stuff and you're having to work through the benches over the next 10, 15 years.
Paul, I got too many more questions. Let's do this again soon. Paul Sankey, of course, legendary on oil. Look for him for the OPEC meeting. What is it, June 1st, July 1st?
June 1st,
June 1st.
Yeah.
It's just virtual. What's virtual about? You go to Vienna.
I thought you'd go to Vienna. And
Anne-Marie Horton goes, and she hangs out in some coffee house. And, sips lattes, and they have a 9-minute meeting.
Right. That's how you do it. That's how you do the energy business.
That's how you roll. Futures up 4. Walmart up. Eric, give me a % move on Walmart now. My brain can't go that fast. Up 4. Dow futures up 19. Dow futures 40,058. It's a Sweeney bull market. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. Russian President Vladimir Putin thanked Chinese leader Xi Jinping for his effort to resolve the Ukraine conflict at a Beijing summit today. The two leaders reaffirmed the no-limits partnership that has grown deeper as both countries face deepening tensions with the West. We get more on Putin's two-day state visit with Bloomberg News Asia correspondent Rebecca Chung-Wilkins in Hong Kong.
Well, they're certainly one another's sort of most important allies when it comes to this bigger geopolitical agenda of building the so-called multipolar world, pushing back on what they see as sort of the U.S. hegemony. But of course, since Vladimir Putin's invasion of Ukraine, there has been a much deeper imbalance in that relationship. Russia has needed China economically far more than it has ever done in the past.
Bloomberg's Rebecca Chung-Wilkins. Slovakia's populist Prime Minister Robert Fico is in very serious but stable condition after he was shot multiple times after a political event in Handlova. After the attempted assassination, doctors fought to save the life of the 59-year-old pro-Russian. Slovakia's defense minister Robert Kalinak says there is no doubt the shooting was politically motivated.
We're just talking about the level of democracy, about capability to understand each other, to accept the other opinion, that not only one is that good one.
The deputy prime minister said he believes Fico will survive. The prosecution's star witness will be back in the hot seat today in Donald Trump's hush money trial in Manhattan. Defense lawyers will try to chip away at Michael Cohen's crucial testimony implicating the former president. In golf, round 1 of the PGA Championship just started in Louisville. We will broadcast live play-by-play after the U.S. markets close on Bloomberg Radio. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
To our radio coverage here from Valhalla, I mean, just simply is live there, or is it it's just PGA, right? Like the people that...
No, Liv's there too. This is
Liv is there too.
Yeah, so everybody's there. It's a full field. It's oftentimes the best field of any major because it's really open to pretty much anybody who can get in there. So it tends to have very strong fields, and they rotate it around some of the best golf courses in the U.S., and so Valhalla is certainly one of those. So it should be a great week.
The usual victims, but let me go to what everybody asked. Does Tiger show up?
Oh,
he shows up, but he's not. I don't think he's
like
relevant.
A senior golfer.
Yeah, and he's in the early crowd, so he's going to be going off fairly soon. But look out for Rory McIlroy. I think he can do it.
They call him Man on Fire.
Yes. Poof.
Yeah, he won his last 2 starts, one in Europe and then just racing down Charlotte.
Okay, he's older now. I'm reading the text here. I'm learning as I go.
Yeah, so there's Scotty Scheffler also odds-on favorite as well. So there's everybody's there. We'll see how it goes.
Is Miller Barber there?
Who's that?
Miller Barber.
No, I think that he might not be there.
Miller Barber.
He might not be there.
PGA, look for that on Bloomberg Radio. I've said this many times. One day, this guy, El, came up to me and says, we're doing golf on radio. And I just laughed in his face. I said, you're out of your mind. And never have I been more wrong. I'm listening to Bloomberg Radio.
It's exciting to listen to.
You have to have good announcers, and they have good announcers.
You got to have good announcers. I'll take that. But Michael Barr, it's like KMOX St. Louis Cardinals, a million years ago. It really works.
I was like you. I'm like, how is golf on the radio going to work? But I'm telling you, boy, it is exciting to listen to.
Look at that on Bloomberg Radio. All of our different properties, Apple CarPlay and the rest. We'll do that for you here this week. We're on YouTube. Subscribe to Bloomberg Podcasts. Search Bloomberg Podcasts. You get the entire show. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures trying to hold on to yesterday's gains after U.S. core CPI data showed inflation was easing and a retail sales report showed that some softening in consumer demand. So right now we have NASDAQ futures up about 0.1%, Dow and S&P futures are little changed. Over to the bond market, the 2-year yield at 4.75%. That's up 2 basis points. The 10-year yield at 4.34%, and that is little change. To earnings we go. We'll start with Roche. ADR is up 1%. It's after reporting positive early-stage results for an obesity drug. And what's moving the markets? AST Space Mobile up 30%. Who is that? Well, it's AT&T. They said they're moving forward to signing an agreement with the company for a space-based broadband network. AT&T up about 0.1%. And news from Uber up 0.2%. It's saying expanding its business, providing shuttles to and from airports, concert venues, sports stadiums. It's also announced a deal with Costco. Uber Eats becoming a grocery delivery partner. I think they might need a bigger car. That is your Bloomberg Business Flash. Tom and Paul.
They're going to have to bring in a tractor trailer to get the Mateo house home, you know.
Exactly.
What's your record at Costco? Have you topped $500?
Oh, yeah.
Oh, yeah. Even doesn't.
Oh, yeah.
You into 4 digits?
Into 6, you know.
Into the sixes.
Yeah,
it's painful.
It's painful.
It's like,
but it saves in the long run.
But
there's
no inflation. I'm
No.
like, yeah, right. Anyways, it's interesting to say. Paul, we got to take a moment here. Yesterday, I believe we had a number of guests talking about a third leg of a bull market being longer. When was the last time we had October up, next October up, and now we're into this sell in May and go away bull market?
Yeah, I mean, we had that little bit of a pullback back in April, call it 5%. And I guess that's it with some hindsight, that was the pullback. Okay. I mean, a lot of folks are saying, boy, maybe it should have been 10, 15%, but here we are with earnings.
What's your overlay yesterday of the Google meeting on their new search engine? That got underplayed, and I'm with Ed Ludlow. I'm sorry. That was like a big deal. You know, they're going to do AI search or whatever.
Yeah.
So, I don't know. I don't have it yet, folks.
No.
But, Eric Schmidt called me up and said, you get it last.
But they're all plowing money into, first the cloud over the last 4, 5, 6 years, and now AI. So you look at the balance sheets, you look at the free cash flow of some of these big tech players, no problem spending money and making the investments.
I can't remember if I said this on air yesterday or not. It's a blur. Does Apple do a bond deal before this big June developers meeting?
I don't know.
Just to distract people?
Maybe. I mean, they certainly can. I think it's one of those things, Tom, you can make 3 phone calls and get this thing out the door.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Lisa Mateo now with our Bloomberg newspaper report. The daily look at the front pages brought to you by Interactive Brokers. Thank you, Interactive Brokers. Discover the future of trading with their next generation trading platform, IBKR Desktop. Download IBKR Desktop at ibkr.com/desktop. The newspapers are so strong, I got them front-loaded into tomorrow.
Oh.
What do we got, Lisa?
Well, you guys touched upon this. So I want to dig a little bit deeper. This is the Bloomberg story. Paramount holding talks with Amazon about an expanded partnership. So it's a lot to keep up with Paramount nowadays,
Right.
But now they're saying that these talks, it could amount to nothing, but it could include bundled sales of channels, advertising too. I didn't realize that Paramount Plus already one of the more popular choices on Amazon's channel store. So if you look on their channel store, they let customers subscribe to those things like Stars, Max, Discovery Plus. But Paramount Plus is on there. Paramount also a large supplier of TV programs to Amazon's Prime Video streaming service. So the relationship is there. It's just about where they're going to take it, I guess, from here. Is that basic?
I think that's it. I think that's it. Everybody's talking to everybody. Paramount also had some discussions with Comcast about a streaming joint venture. So it put it under the context of everybody's talking to everybody because we're trying to figure out how do I get profitability higher with my streaming business? How do I reduce churn? Maybe I need to bundle them with lots of other stuff.
Aren't they teen tweens? I mean, Netflix has X number of streaming people, and Paramount's like tiny.
No, Paramount's okay. Paramount's good. They're getting there. And, again, Nielsen just came out with some data earlier in the week to coincide with the upfronts and just showed that the share of streaming. And we saw that Disney was number 1.
Right.
YouTube number 2.
Correct.
But the next 4 or 5 are all credible. They're all right there, and they're all growing. So, but
I
it's.
kind of like the bundle idea, though. I mean,
Oh,
it saves in the long run because then it's a better price for more of
The
that.
whole thing's a con job. I mean, I look at home.
Brian Roberts' father did this 50 years
screaming
ago.
we don't have Max.
Oh man.
Kennel Fee is saying, why don't we have Paramount Plus? It's like they want to watch 101 Dalmatians. So what do we got next?
You can't win. This is from the Wall Street Journal. So more workers getting to the office earlier to impress the boss. They're starting at 5 a.m. 5 a.m. for sure.
What time did you get in?
5 a.m.
Lisa Tape's in at like 2 or 3 a.m.
I'm in bed before 4 o'clock. No, 4 o'clock I'm here, but I'm up
Okay.
at 2:30. So,
Yep.
But here's the thing: for regular folk who don't have to work a morning show, okay, they're shooting off emails before the sun comes up, right? There was a study that actually showed 21% users logging on between 5 a.m. and 9 a.m. this year. So that's up from 19% in 2021. So more people logging on before, but they say they impress the boss, right? They say they get a leg up on colleagues before that 9 a.m. meeting because they have more done. They have less distractions, so they get more done early.
And Paul, you'll appreciate this. I remember when I first joined Bloomberg, the demand for a 5 a.m. train from the north was so great they had to put on other new trains.
Oh, wow.
Because everybody started, and I had the clearest memory of going, wait, the day starts at 7:30, and then all of a sudden I'm in the office watching the sunrise at 6 a.m. And everything, Lisa, to the good point here, everything shifted to the morning, including, the act we do.
Well, it's a global business. You got to deal with Europe.
You got to deal with Europe,
more
exactly.
people have to deal with. But the question now you're starting your workday at 5 a.m. Is it from home or is it from the office? That's
see?
still the. And
It's easier from home.
I saw Bank of America yesterday was out with some research that showed occupancy of offices seems to have plateaued here at around 50%. They're now calling it. B of A is calling it. That's kind of the new normal.
Okay.
Excuse me, if you start at 5 a.m., when does the day end?
Well, you can get your afternoons early. That's what they're saying. So, for example, like me, I'm in early. I get to go home and watch my kids' games, for sports, or get to, do other things. And then I have to go to sleep at 7:30. I have no life. But
Next, what do you got?
That's it. Congestion pricing. That's what we're talking about. New York Times, another lawsuit. This is from a group, New Yorkers Against Congestion Pricing Tax. I think John Tucker might be behind this one. No, but their lawsuit, they're arguing that the tolling program could shift traffic and pollution to poor minority neighborhoods, things like Lower East Side, East Harlem, and the South Bronx, because people are going to start going the toll-free route, taking the FDR drive to avoid that. They're also saying small businesses are going to be affected because they're going to have less customers, higher cost for deliveries. It's going to cost them too.
Says who?
This is what this group
proof?
is saying.
Do they have proof?
They are saying that the congestion pricing did not find the proof before doing this. So they're saying that they didn't do these certain studies that they should have done to prove that this is going to happen.
This is going to be tough.
I'm going to stay out of it. I'm not informed. I can't make an informed comment.
No, we'll let John Tucker. That's why you have John Tucker, the congestion reporter.
But I don't think anybody knows. I think it's a hell of an experience.
You can look to London, I guess, and probably learn some things.
Stockholm.
That's where they have it,
Yep.
But I'm not sure the analog's there. We'll see.
Not here in the U.S.
Next, you got one more?
Last one. Beer sellers using this loophole. Okay. Cannabis drinks market. So beers are being infused with cannabis, and this is a new thing. Yeah, because there's this loophole. So let me explain this quickly. Okay, so they were inadvertently legalized as part of a 2018 farm bill. You're saying, what am I talking about? Okay, so it allowed hemp to be grown to manufacture things like clothing, but drink makers, they use the loophole to distill hemp into this concentrate. Like, think of turning grapes into wine. So that's what they're doing. So alcohol distributors, they're lobbying to keep that loophole open because they want to keep doing this because they're saying alcohol sales are down. Right. So they're helping that this might help boost sales.
So weed-infused beer.
THC, yes. It's like a 0.3%.
Like is Budweiser doing this?
Oh, no.
No, it's there's a company, Cycling Frog, all these smaller distributors.
Lisa Mateo, thank you so much. The newspapers already got one in the hopper for tomorrow as well. Speaking of her last news story there was a moment in the early 70s where the world changed. A Canadian came out with an album called Harvest, and there were a few other albums around it with Crazy Horse, and this song changed the way things. We're doing this for the Secretary of State of the United States, Mr. Blinken.
Of my life with a cinnamon girl.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene, Bloomberg Surveillance with Michael Barr, Lisa Mateo. We'll get to Lisa here quickly. Lots coming up. James Dimon is joining. Did you know Jamie Dimon's joining us in this hour?
That's what I hear.
Friends in Lacroix in Paris. Looking forward to that discussion with Fortress.
The channel over there?
I'm trying to figure out, in his new building on Park Avenue, what's his view look like?
Oh, man.
I mean, is he looking up to Central Park? Is it looking down to the state? Probably both.
Probably
it's probably
both.
an 8,000 square foot office.
But you look at the architecture, I don't know how that building stands on the way they construct it. It's amazing.
Mary Erdos is in charge.
I have no
of
idea how that
J.P. Morgan Wealth Management is in charge of the architectural engineering of the building. Good morning on YouTube. We are thrilled with the YouTube response. Thank you to the heated live chat yesterday off CPI and retail sales claims in this hour coming up. And I'm not going to waste time on this now because we've got to get to our wonderful guest. But I'm sorry, futures 40,045. It's a Sweeney bull market. Bloomberg Surveillance this morning brought to you by CohnReznick Advisory Assurance Tax. CohnReznick's enterprise risk management solutions. They can help your company drive value through stronger compliance and reporting procedures. Visit CohnReznick.com. To the Bloomberg Business Flash, Lisa Mateo.
You got it. In futures, trying to hold on to those gains from yesterday. Economic data showed inflation easing, but it might not be enough for the Fed's Neil Kashkari. Said interest rates likely on hold for a, quote, while longer. So we have futures. NASDAQ futures up 0.1% at 18,714. Dow futures at 40,000. That shares a little change. S&P futures, little change as well as 5,355. Over to the bond market, the 2-year yield at 4.74%, up 2 basis points. The yield on the 10-year at 4.33%, and that is down 1 basis point. To earnings we go. Wal-Mart up 5%. Strong revenue growth thanks to e-commerce, grocery business, and also more higher income shoppers going through its doors. And then on the flip side, you have Deere. They're down 5%. Reduced its profit outlook for the year. That was due to falling agricultural income. And the meme stock craze losing its steam. GameStop down 11%. AMC down 8%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. So here's what we're going to do. We got Lakshman Achuthan with us with Equity. This is the most important interview of the day to rationalize a bull market. I'm sorry, Achuthan is more important than Dimon. Good morning. Good morning. Joe and the team over at J.P. Morgan, Lakshman here with a really quick thing on our economic cycles. Do the economic cycles, Lakshman, that you look at, do they justify a third leg of a bull market?
Short term, sure. Cyclical is looking at a couple of quarters. It's not looking out forever.
Yeah,
structurally, plenty of things to think about and to give you pause in the way things are going. But cyclically, I think we don't want to miss the forest for the trees. We were in the boonies, right? We had a really bad global industrial downturn.
We had a pandemic and all that.
But even after that, it still kept going. It was hitting Europe. It was hitting China. Remember, beginning of 23, everybody thought China was going to come out. The global industrial upturn was going to be here. Yada, yada, yada. Never happened. Now, at the end of 2023, our global industrial stuff, really, the forward-looking stuff, started lifting nicely. And that's a nice backdrop for Europe. It's a nice backdrop for China. It's a nice backdrop for goods demand. And I hear all of the happy talk around inflation. Okay, the rent stuff is not right. The insurance stuff is not right. It's going to come down. Everybody presumes that goods inflation is no problem. And what we're seeing is if global industrial growth is turning up, and it is, that puts a bid on goods.
Paul, the chart here, we can't show it on radio. It doesn't. We can show it on YouTube, but it doesn't work on radio. Lakshman has a chart of the 5-year ahead GDP forecast. And the only thing moving up is India and the United States, Paul. Everything else is stable. Japan's resilient, but it's this U.S. exceptionalism.
That's where I wanted to go.
Wait a
Lakshman.
minute, Paul. He's breaking a rule.
I know,
he's coming in here with highlighted research notes.
They're very simple.
Can you explain to him?
Yeah, the lines are moving.
Paul, put that up in front of the camera for YouTube.
Yes,
we don't
exactly.
allow this. Okay, pink highlighters don't work. They're banned.
That works.
Continue.
So about that U.S. exceptionalism.
Yeah.
How unusual is that for the U.S. economy to generally be doing well, 3-4%, whatever it is, versus Europe, particularly Germany, boy, and then China? How is that unusual to have that decoupling, if you will?
Well, certainly over the last couple decades it is. This is the breakdown in China is off the charts, and you can see that with the pink highlights. Germany doesn't look good. It's the sick man of Europe again. U.S. is up and India is up. Now, U.S. is up. I think part of it, we have to look at the excess spending. I mean, that's a lot of money we pushed out over the last couple of years. And that may be influencing some things. And certainly India, you know the story. They've got some population growth, and they have an opportunity to do investment for other productivity-enhancing things. And so that's helping India. Everybody else is kind of in trouble on population growth. And the productivity growth is... a big question mark. It's not a given.
What do you tell your clients these days about China? I hear everything from uninvestable, which is kind of where I am, to you can't ignore it, you got to be there. How do you guys think about it?
Well, structurally, you've got a problem. Ideologically, I'm not so sure, right? You don't want someone making an edict and taking your money away. So those are real big risk factors. Cyclically, green light. Since the end of last year, cyclically, it's been a green light. You have this global industrial growth upturn. About 20% of the Chinese economy gears off of exports, which are gearing. Those are gearing now.
Right now, with us worldwide across this nation, Lakshman Achuthan, economic Cycle Research Institute, ECRI. I got a brain freeze there, folks. It's been raining. We haven't seen the sun for 4 days. Give me a break. Coming up next, James Dimon, after Lakshman Achuthan, with Francine Lacroix in Paris. I was showing a cherub today at work, the famed Ibbotson chart of Yale University, which, as Gartman would say, is from the lower left to the upper right. It is the exceptionalism of American capitalism. That chart goes back to Geoffrey Moore and the founding of ECRI. How do you treat the immovable force, which is stocks up?
Look, there is an upward trend, which is undeniable in the U.S. economy over decades like that. And there's no great reason for that to change. On top of that, you have cycles. Right now, we're to the upside. We can easily flip and go to the downside in a couple of quarters. This is a very tactical framework that we're using, and we're overlaying that on the structural, say, wind at your back that you're describing. On this closed cycle, Paul's question, like, how is the U.S. bucking the trend up when everybody else is going down? Part of it, sure. The
is
innovation.
It debt? Do you say it's stimulus, the fear of debt?
I think it's an elephant in the room. Look, we haven't. There's, it's a tired phrase. Off the charts. We haven't seen this before. But the amount of debt growth is significant, and it's different. If you look at how the U.S. reacted to the pandemic and post-pandemic era, right? It was different from Europe and from China. China. They did their big investing after the financial crisis.
Just because of time here, we're waiting for Mr. Dimon. I want to tie Lakshman Achuthan, whose family's identified with New York City, into James Dimon, whose bank is identified with New York City. Do you believe in American exceptionalism?
Of course.
That's a theme that we've got right now.
No. I have no doubt about that. That hasn't wavered at all. But it doesn't mean I'm not concerned about debt growth. It doesn't mean I'm questioning, like, how real is some of the growth in light of the approaching $8 trillion of excess spending. Maybe you could argue the policy is that we should be investing in this and that, and that's fine, but let's recognize that. And so we described that last year as this tug of war between a big cyclical push downside to the downside and an offset from these non-cyclical items. And we've got some demographic stuff where jobs and health employment has been extremely strong, right? That's growing at 4%. That kept us out of recession.
We're putting does the Lakshman have makeup on?
I don't think so.
I
It's just natural.
I don't need it.
We're putting makeup on. Francine's got out the L'Oreal. She's putting Guerlain or something on Jamie Dimon now. They're setting up the makeup. And they're in Paris here. I want to say this is the excellence of what we're doing at Bloomberg. We had David Solomon and Brian Moynihan with Jonathan Farrell here the other day as France does, what is it, Paul, like a capitalism week before the Olympics?
I think it's
like
come
a
invest
huge
here.
deal.
Come invest
Come
in.
invest in
Yep,
France.
fine.
And people are.
I will.
I mean, ECRI's thinking of setting up a Paris office. What do you think? 6th arrondissement, or are you going to go across the river? What do you think?
Oh, I don't know. Let's expand. Let's go across the river.
I just think it's booming. I've got some offspring over there. I'm very proud of them. I'm sorry, France is like a different environment right now.
Yeah, and right now, look, structurally, there's a lot of issues that remain, and I don't want to underplay those. But cyclically, you've got a global industrial upturn, so you have some demand bid. And I think that's maybe the surprise with goods inflation down the line.
How does
People
a
aren't
real
looking
yield,
at that.
what does your weekly indicator say about the real yield?
To the upside. It's still a little too, it's still
A real
tight.
yield signals a normal market, right?
Well, look, you can't. I mean, you'd like to have your cake and eat it too, but it doesn't always work out that way. If you have growth going up, it's not always that inflation just goes to the downside and you have this immaculate disinflation. It doesn't work that way. So I would say I think we're banking on the global industrial upturn, and we're concerned about the knock-on effects for prices. And so that runs into the central bank narratives, which is, hey, we're cutting.
Lakshman Achuthan, thank you so much.
Yep.
James Dimon, Paul.
Yep.
I mean, I'm sorry. He was out in Illinois, lost, out with Diane Swank at Bank One.
Yeah.
Comes back, big shoes to fill at J.P. Morgan.
Sandy Weil.
Doing it for any number of years, and it's just a path of excellence of total return versus other major banks.
And what's amazing, it's I don't know if it's the closest we've gotten to a J.P. Morgan of his time. Just really the leading.
Now, Francine Lacroix in Paris with Mr. Dimon.
J.P. Morgan Chair and Chief Executive, thank you so much for hosting us again at your Global Market Conference. What's market turbulence looking like right now? So we have the CPI print yesterday, markets rally. Are they getting ahead of themselves?
Yeah. So I wouldn't call it turbulence. We've had good, healthy markets for quite a while. They're kind of predicting a soft landing, and you see that in both stock prices, which are kind of high, credit spreads, which are kind of low, markets which are kind of wide open. That's all good. It doesn't tell you what the future is going to be. I mean, I can point a lot of times in history where that was true, and the next year it wasn't true, and so, we'll see. I don't pay as much attention to monthly numbers as most people do.
I know. So what do you think the future is for inflation and interest
rates? I'm a little more worried about it. I mean, we've had very big fiscal deficits, and, I think the underlying inflation may not go away the way people expect it to. And I look at the future, like a lot of things we look at are kind of inflationary. The green economy, the remilitarization of the world, the infrastructure requirements, the restructuring of trade, fiscal deficits. So I think there are a lot of inflationary forces in front of us that may keep it a little bit higher than people expect. So the surprise would be rates are higher, inflation a little bit higher, and maybe that'll slow growth. And obviously geopolitics is a whole different issue. That could be determinative in what our economy does next year. And we're just not going to know.
But so does that mean you think it's 50-50 whether the Fed cuts or hikes next time around, the next move?
I really don't pay that much attention to that. The Fed will have to follow the data, and I don't know what the data is going to say, but I think they are doing the right thing to be patient right now. See what's going to happen. They may not know for a couple of months.
But no big correction. I mean, if you don't pay that much attention to it, it means you're not worried about anything.
No, I'm worried. I just said stocks are very high, and I think the chance of inflation staying high or rates going up are higher than other people think. So I think the chance, my view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
In the U.S. or globally?
Well, I'd say in the U.S., but also that could affect globally, yeah.
And so what does that mean for markets?
They'd be down. And credit spreads would gap out.
So why is the market not pricing that in?
A lot of happy talk.
Where does that happy talk come from?
Low rates, central banks are going to reduce rates. Maybe the geopolitical things disseminate, don't cause problems, and so the future isn't predictable like that. So I'm a student of history. I've watched all the inflection points. If you go back, my dad was a stockbroker. I go back to the booming markets of 72 and the collapse of 74. The healthy markets of 80, the collapse of 82. The 87 market crash, the 1990 real estate crash, and almost all of them were not predicted the year before. So I look at these factors that drive these things. They're not always known. As a company, we prepare for all of it so we can serve all our clients regardless.
But what do you see as the main stress right now? Because if it's geopolitics, we talk about it. It's just not really priced in. Is it distress? Is it something actually going under that you worry about, or just multiple factors coming in at the same time?
No, I think geopolitics could create the main stress that we're worried about in terms of oil and gas prices, trade alliances. But I think the surprise would be higher rates because inflation didn't go down. That inflation's been stubborn, maybe bounces up next year. I think inflation next year may be in the cards. It may have nothing to do with what you're seeing today. So that to me is the surprise. If you had higher rates and God forbid stagflation, yeah, you'll see stress in real estate and leveraged companies and some private credit and things like that.
So is unpredictability the new normal?
I think it's been the norm since my whole life.
Has it?
Yes.
Not worse now?
No.
What happens between China and the U.S., and what does that mean for your appetite of being China?
Yeah, so the geopolitical situation is very tense because of Ukraine and Russia, Iran, the terrorist activities in Israel, North Korea, nuclear blackmail. We've never had nuclear blackmail before, and this is, of course, affecting our relationship with China. And it's going to be hard to have a great relationship with China as the Ukraine war is on. We're kind of on different sides of that, and put Taiwan aside. Having said that, I think it's the right thing for America to fully and deeply engage with China, competitively. Every nation is going to do what's in their own interest for national security. So should America. We should define that fairly and properly. If there's unfair trade, negotiate that or do whatever you need to do. But the engagement is the right thing to do. China is not a natural enemy of the United States. They have a lot of their own problems. So, to me, we could work together as best we can. And then we have common interests: climate, anti-nuclear proliferation, anti-terrorism.
But what does it mean for a bank working in China, actually, given all of this volatility?
They're cautious. I mean, China, if you look at China from a risk-reward basis, it used to be very good. It's not so good anymore because all these things can go wrong. And remember, we bank, I've got the number, but 1,500 multinationals in China. They're not leaving China, so we're going to serve our clients there. We're just much more cognizant that the risk is higher. And I put Hong Kong in that bucket too. We kind of look at China, Hong Kong as one at this point from a risk standpoint.
What does the Trump administration mean for the U.S. economy?
I don't know.
Why? Because it's unpredictable, or because we're too soon to actually trying to figure out the policies that he would put in place?
So if you look at history, who was elected president may not necessarily affect the next year. That's kind of like we're a big tanker and that's going to happen. I think the much more important thing is what we do in the geopolitical situation. I've always been quite clear that American leadership is provided to keep the world free and safe for democracy. And that means economic alliances, which includes trade, by the way. I think we should spend more time in trade. It means NATO. It means that Russia should not win in Ukraine. Because if they do, I think it can tear asunder this Western world.
I know you've ruled out being Treasury Secretary. Yeah. Why? What would it take to get you into politics?
I don't think I'm suited for politics. I love my job, and so I'm not sure I want to do something like that. And I can hopefully.
But even if you got the call, would it be hard to say no?
I don't know. Probably yes. I love my job, and I have no interest in leaving or doing anything else. So.
We're in France at a global markets conference. What are you expecting from Basel III? What will Jay Powell put in place in the new rule book?
I should mention, by the way, because President Macron has done an outstanding job here. Pro-business, got us to move our trading floors here. He wants to grow his economy. There's much more innovation. We had a thing last night about innovation. So, look, Basel III, we've been quite clear. We thought it was excessive, not well thought through. I would love to know what the end game is. What are they trying to accomplish with private credit? What are they trying to accomplish with, like even the other day, 80% of mortgages left the system, and now the government is talking about having a bailout system for mortgage companies because they're no longer in a bank that has the ability to provide liquidity in tough markets. That would be the same thing in market making. So they're looking at it. I trust Jay Powell to look at and analyze what they need to do, how they need to do it. The other thing, which I'm not sure Europeans know, I have no idea. and it may end up in a lawsuit or something like that. But the amazing thing to me is that America ended up the end game 30% more capital than a European bank in America. And I just, why are we arguing about international standards and then we simply don't do them? And also, I think the regulator should answer the question, what do you want? How do you want the system to work? Do you want it to private credit or public credit? Do you want mortgages out of the banks? Just dictate it. If that's the goal, just dictate it. If you don't want leverage lending in the bank, just dictate it. And I think, we are guardians of the financial system. We bank 100 countries, and we're on the ground in 60 countries. We do great work for cities, schools, states, hospitals, solar, wind, climate, middle market companies. Is that what they don't want or they do want? They want to make it more expensive.
But they
for those
know,
companies?
or are they still trying to figure it out?
I think they've got to figure it out. I don't think it's quite clear from any analysis they did. You guys should read it and write about it. There was no detailed analysis about cost benefit, what they're trying to accomplish, what the outcome will be.
That's why we're asking you, Jamie. Talk to me about France. So you're positive on the President Emmanuel Macron. I also know that you were at the Choose France event on Monday. If he relaxed labor laws, would you hire more in this country?
He did relax labor laws.
But if he relaxed them more?
Possibly. We now have 1,000 people here. We have large trading floors here, which trade, I've got the number, $5 or $6 or $7, $800 million a day. When you have 1,000 people, you tend to hire more. More technology, more, and that's been true for us since I've been at JP Morgan. Once you have a very competent group of people and you have hiring and capability and friends, you tend to do more things there. So my view is we will be doing more things here. And it was the tax law they put in place, the regulations they put in place, the labor flexibility they put in place. Those things do make a difference. And very importantly, they don't just lift up JP Morgan here. We pay a lot of taxes here, which help lift up all citizens. I don't think President Macron did that for JP Morgan. He did it because he knows his country needs to grow, bring in innovation, and that's how you build a better country.
So the chief executive of the largest wealth fund in the world says that actually America's doing much better because Americans are less lazy or work harder than the Europeans. I mean, is that fair? Is that regulation?
I hate total blanket statements like that. I know a lot of Europeans who work hard, but I think when you see the things about work hours, I think it is somewhat true. Americans are hardworking. Anywhere you go around, Americans are hardworking, but I see that here too. I don't think, and the innovation people you meet, they're working just as hard as the innovation people in the United States.
So you also, in terms of headcount in the UK, I think it's at the highest that it's ever been, and you're also you're giving money to try and retrain. And you've recently met with possibly the next Prime Minister, because he's so far advanced in the polls. What do you think?
Look, I like the fact that both the Conservative and the Labour governments are talking about pro-business, simpler regulations, getting more innovation in the country, becoming competitive, and we all have too much debt. Growth is the best antidote for everything. And so having a growth strategy is good for a country, and it's good for the lower income people. And this training stuff is maybe the most important, is get training, jobs. That first job is a first rung in a ladder, creates dignity, more household formation. And I think countries have to do more of that, because if they don't, you can have a tough time.
But do you think the UK economy will change under Labour?
I don't know yet, but I was happy with what they were talking about. We had Rachel Reeves come to our conference too, that they're all talking from the playbook. We need growth, simpler regulations, more capital formation, more capital investment, meaning property taxation, because that's the way to help our whole country and all our citizens. So that is what we should all be doing.
Jamie Dimon, we talk around, India all the time. Is this a decade for India, and does it somehow counterbalance China for, world growth?
Yeah, look, I think India has done a very good job. And, when you look at India, yes, it should have a very bright future. I'm not saying it's a counter to China, but a very bright future. And I think we should all be reaching out to India. That, they have to stay non-aligned because they're kind of where they are in the world between Russia and China. But, they're a democracy. They're a natural friend of America and the Western world, and we should all be helping them. And they've made a lot of changes there, infrastructure, transfer payments, 700 million people bank accounts that are going to be very good for that country.
So what does that mean for JP Morgan?
Well, we're not in the retail business there, but
will you be in the future?
We have 60,000 employees there. We got big campuses, high technology. and we're expanding our trading, our research, our investment banking. Yeah, we're there in a big time. Yeah.
Can you talk to me a little bit about JP Morgan and how, I mean, you've had a number of high-profile departures. How does that change, actually, the way you focus your business and how you run things going forward?
Not at all.
Nothing? Zero? If you were to buy anything, what would you buy?
Oh, that's different. Look, we can't buy banks. You do know that. So, you know.
Well, you could buy your European bank. Could you?
I wouldn't even try. I think the American regulators would hate it. I think the regulators here would hate it. Even if they said, go ahead and do it, I'd probably be in courts and things for a year and a half. Huge distraction to my own company. I'd rather just say we want to add clients in this country and clients in that country. We'll add bankers and technology and branches. It's just a better way for us to grow.
Okay, but if you could buy anything, I mean, not a bank.
I can't tell you.
But you're thinking of something?
Yeah, we always look at stuff, yeah.
What region?
But no, we're not looking at any major acquisitions or anything like that.
Technology?
Right now, if you look at what we're doing, we're adding literally, and we have Investor Day next week. We're adding retail and wholesale branches. We're adding them in the United States. We're in almost all the major 100 cities there now. We're adding commercial banking all over Europe and Asia. We're adding technology around payments and even a blockchain called Onyx to move data and maybe move money one day. We're constantly investing. We have 200 people, 2,000 people in AI and machine learning, 400 use cases on the way to probably 800.
I know. So if I speak to you in 5 years, how much bigger and how much different
will you be? You'll probably be
be
speaking to a fake Dimon who's just answering questions.
What, an avatar?
An avatar, yeah.
Do you think about technology a lot?
Yes, all the time. Every meeting we have, this has been true my whole life, when we have any management meeting, your technology agenda is on the table. That includes AI, cloud, just more analytics. What are you doing to do things better, faster, quicker for clients? Digital, a huge amount of digital services, integrating them better, automating them better.
But that would change. I mean, that will change, I guess, the heart of banking. Does that mean that you'll see more winners and losers because of the technological advancements?
So technology has always changed. The heart of banking, moving money, holding money, advising money, raising, that won't change. And you have to do that according to rules, laws, regulations by country. What'll change is how you deliver it. So like right now, you go on your phone and you can move money and buy stocks. That wasn't true 20 years ago. So yes, everything you do will change because of technology, but you'll still have to move money, budget, raise money, make investments, et cetera. So the core won't change.
But will it change?
And regulations may change that too, obviously. So
in the U.S., so again, would a Trump presidency be more favorable to banks when it comes to regulation?
I don't know. I mean, I am unhappy with the amount of rules and regulations coming out today. I don't know what a second administration of either one would do. I'm hopeful that they focus on growth, which is good for the citizens, which is good for the country. And I would help anyone I can to do that for my country. I'm quite patriotic about that. And I do think you need to help.
What, in terms of serving?
I think you need helping.
Oh, helping as the bank.
Yeah,
okay.
Exactly.
It's good to get that clear.
Exactly.
Okay, JP Dimon, thank you so much for joining us. That was, of course, the JP Morgan Chief Executive Officer. With that, I'm going to send it back to you, New York.
Francine Lacroix, thank you so much. In Paris with Mr. Dimon. Bloomberg surveillance this morning with futures up 6. Brought to you by BNY Mellon Insight, June 4 to June 6 in Nashville. Don't miss the essential event for the financial advice community. Visit Insight, INSITE, insight.bnymellon.com. James Dimon there, a zillion topics, but somewhere in the middle of it was, I think he said Americans work harder. I believe I heard that.
I heard that, yeah. I don't know. I mean,
Lisa Mateo was listening. She said, "Yeah, you think so?"
Exactly.
That's right.
But he was, he's sitting there in Paris, France, so he's got to be a little bit careful. But
really,
yeah. But remaining upbeat about the economy, remaining upbeat about his consumers, about the JP Morgan, what he's seeing there from the JP Morgan clients out there.
1,000 employees in Paris now.
Yep.
They clearly want to grow. They're arguing about the taxation of high-income intellectual employees. It's brutal.
And Mr. Solomon said they tripled their headcount in Goldman Sachs tripled their headcount in Paris. So.
With a Bloomberg Business Update, Lisa Mateo.
You got it, and we are just moments away from initial jobs claims for last week and some more economic data on top of that. Ahead of that right now, we have futures, a little bit of lift to the market, taking a bit of a breather after yesterday's gains. Right now, you can see the bond market, the 2-year yield at 4.74%. That's up a basis point. The 10-year yield at 4.32%, and that's down a basis point. So as we wait for the markets, let's break it down. As we wait for the initial jobless claims, let's break down the markets. NASDAQ futures up about 0.1% at 18,719. We have Dow futures, little change at 40,000 right now. We have S&P futures up 0.1% at 5,338. All right, let's get to some earnings. We'll get to Cisco Systems. They're up 2% right now. Raised full-year revenue forecast is really showing that businesses starting to spend on their computer networks once again. Then you have JD.com. Their ADR is up about 4%. It slashed prices, ramped up those shopper perks. And then we have Roche. They're up 3% in Switzerland right now, reporting positive early-stage results for their obesity drug. Yes. Okay, so the numbers are starting to come in. We'll start with those initial jobless claims for last week. The survey was for 220,000, coming in at 222,000, Tom. So a little bit of a tick higher.
A large amount of economic indicators today, and of course the claims number front and center, particularly after the jump to 231 last week. I don't have the revision off last week, but it's pretty much stable, 222. I'm not going to call that market moving. Housing statistics, which Paul really sits on, are a little bit soggy. Building permits are particularly soggy as we look at the mortgage market and the financing there. Philadelphia Fed business is a little bit light, I'm going to say. It goes from 15.5 down to 4.5, one tertiary indicator. And I do want to point out industrial production and CAPU coming out at 9:15 will be important. I'm going to call it, there's a little bit of red and green on the screen blinking here off these economic indicators, but it is quiescent. The 10-year real yield, 2.03%. Leading the charge on economic indicators, thank you. Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Paul Sweeney with your futures at 40,000.
Exactly.
53. We've got the right guest.
We do. Phil Tays joins us. He's the CEO of Tays Asset Management. So, Phil, it seems like we're just wrapping up earnings.
Yeah.
And if that weren't enough, we had a lot of inflation data to parse over the last couple of days.
Right.
What do you make? Let's start there. Let's start with some of that. You go to Go on your Bloomberg terminal to see all the economic data that gets released. When you see the PPI, when you see the CPI, how did that change, if at all, your view of inflation, and maybe how the Fed will react?
So it was largely good news in the sense that it wasn't bad news, right? So the fact that we didn't get a surprise to the upside, the surprise, the fact that certain parts of inflation are kind of in check. And so I think this story at the moment is like maybe for the next couple of months over. But obviously stocks rallied. For the way I frame it right now is that it looks like we're on a trajectory of like 1, 2, or no rate decreases.
Right.
And what that does is it creates a path higher for stocks. If you look at the $100 billion in fiscal stimulus coming online in 2024, the $100 billion, that's going to be enough to move stocks higher. And I think that bonds aren't going to get blown up here, at least for the next 3 to 6 months.
So, all right, let's just go to the earnings front, because that was also, we had Wal-Mart today come out with some pretty solid numbers that kind of suggest that the consumer, by and large, is okay. Yes, there's a K kind of shaped recovery, but what did you learn from earnings?
So earnings supports that same case, right? Is that we're all just trying to make 20% a year, and that we could be on a trajectory based on the fact that earnings came in above forecast. So let's run with the bull at the moment. However, I think we can switch to other topics.
My distinct memory, you're actually looking at this today with the Ibbotson chart. I was showing like the Guadalcanal low and the Carter malaise, which is misnomer. It was unfair to former President Carter. But, I was showing some of the history of the market moves. And there we were in 1999, 2000. And basically, as a general statement, we all got wrong the lack of profit in these tech darlings in 2000. What are we getting wrong now? And may I suggest it's the certitude of CapEx. We believe we're going to spend cajillions efficiently and wisely. Phil Tays says who?
Well, so I think what we're getting wrong now is we're underestimating the fact of the impact of growing debt on growth. So, if you make $100,000 and you borrow 10, you spend 110, and that's what's happening right now in the economy. We've got continued fiscal stimulus coming into the economy. That's goosing GDP. So ultimately that has to change, and that's where the whole conversation changes, and you can look at potential bad news once you get out through the next 3 to 6 months. The other thing that I think we should maybe start to talk about is the impact of the election. Yep. Right, so you can predict as much as you want, but the last 3 big market events over the last 20 years were sort of surprises. So I think you need to game out what's the potential surprise that's going to be coming along.
So how do you kind of do your game theory there about this election, which I don't know, let's call it kind of 50-50 at this point. I'm not sure anybody's got like a really strong opinion which way it goes. How do you think about it?
Well, so one of the things about this game theory right now is that this level of high debt. Right, so it almost prevents maneuverability around everything. So let's say Trump gets elected, tax cuts really aren't an option. We don't have time for supply side economics to wind their way in, and it just blows up the deficit even more. A continued Biden presidency, yeah, go ahead.
Why are bonds priced to perfection? Why have spreads come in? Greg Peters says we're upper decile in terms of narrow spreads. There's a confidence here to acquire bills, notes, and bonds. Price up, yield down. I mean, that's obvious.
I love fixed income because it's perfect and it's reliable right up until it isn't. Right?
Well, that's well said.
And so, you get payments all the time, and then all of a sudden, wait a minute, where's my interest payment? We have a default. That's the most fascinating thing to think about if you think about the macroeconomy, which is this fact that you have like growth in debts, sovereign debts with impunity. Yeah. And I don't think that will continue forever, and that's maybe one of the biggest surprises we can think about.
There's a guy. There's not one. There's 2-3 guys out on Twitter that do every single foreclosure across America, and walk through the math. Mm-hmm. There's a building in Northeast Washington D.C. that was built literally 24 months ago, occupied 24 months ago, and it foreclosed yesterday with 90% occupancy.
Yep.
That's how fast the math of debt hasn't worked.
Yep, right. Absolutely. So Phil, let's just go down that fixed income path here. I mean, I guess a lot of people are saying, boy, I can sit in a 2-year treasury today and get 4.75% and maybe get a little bit even more in my money market. What kind of risk should I be taking in the fixed income space? Do I stay there with my nice safe treasuries, or do I take some credit risk? And think about that.
So we're advocates of adaptive fixed income methodologies. So instead of just saying I'm going to be 2-year, you say like I'm going to be where the trends are. Right?
Okay.
So we were in high yield almost all year. We went defensive briefly when high yield bonds moved down, and we were in T-bills. And so that was the time to be in T-bills, and now we're back into high yield bonds. So I think you be adaptive in your fixed income approach, because if you're not, things could go sideways quickly.
So any particular sectors in high yield? I mean, you kind of have to pick your spots, don't you?
Yeah, you do, but we are just indexers. So we go in and we try to replicate the index when we're in high yield.
Yeah, index, you do that.
And I tell you, high yield made money in 2023.
With us on Apple CarPlay and Android, Phil Tays, thrilled that he could be with us today. It's been a jumble of an hour with James Dimon in Paris and Lakshman Achuthan before that. We're out on YouTube. Thank you. Subscribe to YouTube, Bloomberg Podcasts. Subscribe to Bloomberg Podcasts and search that. That's how you get to us on YouTube. Some confusion on that, but we're there in a replay of 2 hours, 56 minutes.
All right, Phil. So this Federal Reserve here, let's assume they cut once or twice here. On the equity side here, I'm kind of wondering, do I go look at small and mid cap? Because if the Fed's going to start cutting, I think this economy can really start to move. Do I find better opportunities in small and mid cap, for example, than my usual trade with just buying Apple and Amazon and all that kind of stuff?
How many years can you wait?
Well, I got less than you, but I've got less than Lisa Mateo.
I think a balanced approach. We happen to be across some of our hedged equity stuff overweight.
Okay.
Small and mid cap, and we have been for many years, and that's been a bit of a painful trade as we watch for that, wait for that to come back. I think there's more risk there. I don't know why you aren't some sort of more heavily weighted in large cap still, because that's where the momentum is right now. I think you could potentially index again, but I would have more heavily in large cap and growth at the moment.
What do you do with big tech? I mean, somebody's just out moments ago. I don't have it in front of me, folks. I'm sorry. But I can just see the herd circling towards NVIDIA. I believe it's May 22nd, which, Paul, isn't that far away as well. How should our listeners and viewers treat the importance of, or the presumed importance of NVIDIA?
Well, so our approach, which we've talked about before, is unique somewhat in the sense that we say you bifurcate your equity strategies, right? So you do want to be in momentum, and you do want to be where the markets are gaining and where the growth is. And so you can do that by just having triple Qs or S&P exposure, and you're not overly focused on the Magnificent Seven. However, when we talk about contingency planning, and so there's potentially some big things happening within the next 12 months, we say take half of it and put it into hedged equity funds or ETFs. And what that allows you to do is still even have that exposure right now across 100% of your equities platform, but you've got hedges in place to offset big downturns.
Phil, thank you. Phil Tays with us here in the jumble of an 8 o'clock hour with Tays. Asset management. Futures flat. S&P futures up 2. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. This is Donald Trump's last day in court this week in Manhattan. Bloomberg's Amy Morris has a preview.
Look for the defense team to continue its cross-examination of former Trump attorney and so-called fixer Michael Cohen as it tries to discredit the prosecution's key witness in Donald Trump's criminal hush money trial. Cohen is also expected to be the government's final witness, which means the prosecution could rest its case as soon as today. Trump himself has not said whether he will take the stand. Court is adjourned tomorrow so Trump can attend his son Barron's high school graduation in Florida. Amy Morris, Bloomberg Radio.
Chinese President Xi Jinping and Russian leader Vladimir Putin pledged to intensify cooperation against U.S. containment of their countries as they warned of growing nuclear tensions between rival powers. Putin is making a 2-day state visit to Beijing. China has been a key ally as Moscow pursues war in Ukraine. Meanwhile, Ukrainian President Volodymyr Zelensky says the delay in U.S. aid to Ukraine has had a direct impact on the war along the northeastern border. Russia is now pushing towards Ukraine's second largest city, Kharkiv. Zelensky told ABC the money for military aid goes mostly back into the U.S. economy.
All this money, they goes to the factories in the United States, mostly. Some of them in Europe, but mostly in the United States, I think about 80%. And then these factories gives jobs to Americans.
Zelensky says the northeastern border could be defended with just 2 Patriot missile batteries. The Biden administration is initiating policies that it says will help foster a deeper domestic supply chain for solar panels. The measures announced early today include expanding tariffs and promises of heightened vigilance for signs of unfair trade. And round 1 is underway at the PGA Championship at Valhalla. Early on, Luke Donald leads at 2 under. We will broadcast live play-by-play after the U.S. markets close on Bloomberg Radio. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Bloomberg surveillance this morning brought to you by Interactive Brokers. Interactive Brokers charges dollar margin loan rates from 5.83% to 6.83% rates subject to change. Learn more at ibkr.com/compare. Berkshire Hathaway, it's a different Berkshire. Chubb, the venerable insurance company. This is a huge global platform. And Evan Greenberg of the Greenberg family, yes, he's the distinguished son of Ace Greenberg. Excuse me.
Yeah, right?
Yeah, I got that right.
Yeah.
My head's spinning. Evan Greenberg has done a phenomenal job pulling in a Zurich-based company and then attaching that venerable Chubb name to it. Yep. And, they've done like insurance kind of double-digit return, and Mr. Buffet has climbed on board.
Berkshire Hathaway, Tom, $6.7 billion investment was disclosed in the recent filings. Look at Chubb. The stock was up 12% as of yesterday's close. It's up 8% pre-market trading. That shows you, Tom, just the impact there. And then this feels like a Warren Buffett, a Berkshire Hathaway.
Yeah, this is
type
their
of
heritage.
Investment.
Yes,
insurance,
absolutely.
Railroads, things like that. You talk to them about it, but it goes to the Warren Buffett story of $189 billion of cash on their balance sheets as of their last quarter end, and the question always is, wait, where can they deploy that?
I said Ace Greenberg, Maurice Greenberg, and I'm sorry, Maurice Greenberg, with all of his philanthropy in New York and all he's done, the kids worked out. I mean, usually the kids are like screw-ups, and Evan has like really gone to town with Chubb, and they're going to write a check for the Baltimore Bridge. It's like a big check.
Oh, it's a big check, yeah.
You know, it's the kind of check Mateo sees, but it's a big check for the Baltimore Bridge. That from Chubb.
Yeah, they're clearing
We'll see we'd like to talk to Mr. Buffet about that. That would be good. Futures up for Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen after we received some more economic data. We had initial applications for U.S. unemployment benefits. They fell last week by 10,000 to 222,000. Continuing claims rose. Now, on the housing front, you have new U.S. home construction that rebounded in April by less than expected. Building permits fell, and the cost of imported goods rose in April for the fourth month in a row. Let's get to the markets now. We have NASDAQ futures, little change at 18,705. Dow futures at 40,059, and we have S&P futures at 5,336. Over to the bond market, the 2-year yield at 4.76%. That's up 3 basis points. The 10-year yield at 4.34%, and that is little changed. Moving the markets, Chubb, you talked about its shares seeing a boost up 8%. Warren Buffett's Berkshire Hathaway unveiled a $6.7 billion takeover of the insurer. And then you have companies making news like Microsoft. The Wall Street Journal saying the company asked about 800 of its cloud and AI employees in China to consider relocating to other locations because tensions are rising between the U.S. and Beijing. Their shares, though, are little changed. And Toshiba plans to shrink its workforce in Japan by as many as 4,000 people this year as part of turnaround efforts there. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Sweeney, when you were at Lawrenceville, were you in debate club?
I was not.
I was not in debate club.
No.
I wanted to be, but I was too busy
We had a very good
moving
debate
a
club.
puck up the ice.
Yeah, very
but
good
debate club was great.
People like to argue.
Wendy Schiller's expert at debate. I mean, September 26, 1960, Howard K. Smith, where we invented this with Kennedy and Nixon. Nixon didn't wear makeup. He got sweaty.
Yep.
Mayor Daley of Chicago said, quote, "My God, they've embalmed him before he even died." This was Howard K. Smith, Sandra Van Oker, and Wendy Schiller was there. It was great. It was like the first debate. Now we're going to do new debates, and Professor Schiller Brown is with us. Okay, Wendy, they're both going to wear makeup. Some would say on an equal basis, they all look like they need to be embalmed. This debate's not going to be like Kennedy-Nixon, is it?
No, it's not. We can't expect that it will be. But strategically, it's a smart move for both of them. Trump is leading the polls, and I think he wants to really, widen that lead. He wants to show he's vibrant, he's energetic, he wants to be more coherent. than Joe Biden. But Joe Biden will try to project calm, knowledge, responsibility. And the Biden campaign, why they agreed to this now, it looks like they're just trying to sort of remind people of what Trump is like when he goes freewheeling, when he goes off script, which he does all the time at his rallies. And this is an opportunity to remind America what life will be like under President Trump if he wins again. And they want to get that image in the voters' minds early in this campaign.
There's a whole history here of coaching. Different people. You play Donald Trump, you play Joe Biden, whatever. But there's a whole history of coaching. With that said, Professor Schiller, how do you coach the Republican candidate?
Well, I don't think you do. You just say, don't say anything, really outrageous. Donald Trump has shown, much to a lot of people's surprise, really strong political acumen. I mean, he seems to know when to sort of do things. He loves TV. So, I think there's not a lot of coaching there. Maybe the lighting. Also the famous line Lloyd Bentsen used against Dan Quayle was coached, right? I knew Jack Kennedy, you're no Jack Kennedy. That was all planted. So the question is, can the Biden campaign, plant lines for Joe Biden? Because he tends to go off script too. If he can do a State of the Union type performance on June 27th, I think he regains some footing in the polls.
Well, that would be the upside. But Wendy, boy, I can see a lot of downside here, a lot of risk for President Biden here because he's not as strong when he's off script. So that had to figure into the calculus here. But I guess the campaign felt like the upside was more than the downside.
Yeah, Paul, I mean, basically, they're just saying, look, it's going to be the lesser of two unpopular choices here. And we just have to remind the American voter that even if you have an older, sort of stumbly Biden, it won't be chaotic government. The government will function. People's needs will be met. Nothing will be too haphazard. Nothing will be too corrupt. That's what they're trying to convey. Because remember, Donald Trump is very popular among Republicans in the base, but he's still not popular with everybody else, including independents. So there's still some upside to be gained here from this debate.
Where are we in our issues? I've seen in the zeitgeist, Professor Schiller, over the last number of days, whatever, Republican, Democrat, it's all about inflation. And Paul, I'm sorry, all my radar's up. I just don't believe it's all about inflation. I mean, I just don't buy it. What's the issue that really resonates?
Well, I mean, I think that it's not a single issue. And I think that's something we didn't really pick up well enough in 2022. For women of a certain age and their daughters, abortion is still a really crucial issue. And it's the most important issue. For small business people, working people, wages and inflation are more important perhaps than that. This is a sectoral kind of election, meaning there are different issues that matter to different constituencies who are all seemingly engaged to go out and vote. So it's tougher to really emphasize one issue over another if you're one of these presidential campaigns, because it's really an intensity situation. And with abortion on the docket, meaning in possibly Arizona, definitely in Florida, that keeps that issue alive in a way that the Republicans still haven't figured out how to handle.
Wendy, we just on Bloomberg Television and Radio heard Jamie Dimon. He was interviewed by Bloomberg's Francine Lacroix, and he said regarding China, it's really important for the United States to remain engaged and fully engaged with China. But that doesn't seem what President Biden doing. President Biden seems to be continuing some of the tariffs of President Trump, and then, maybe even doubling down, if you will, on that type of rhetoric and that type of tariffs. What's the Biden administration's plan?
Yeah, I mean, Paul, the most surprising thing is that Biden has kept these tariffs in place for the most part, invested a lot of money in domestic production of things that we need, like semiconductor chips. So Biden wants to not only insulate himself from Trump charges he's soft on China, but I think they still see China as an economic threat. They still see all sorts of problems with Chinese sort of influence in American politics, American economy. And they want to be strong on China to insulate themselves against charges by Trump that were weak on China. And the border is still going to be a very vulnerable issue for Joe Biden in June, unless they issue new regulations changing the system. I think that's going to be one of the toughest things he's going to have to deal with on June 27th in that first debate.
Where are we on vice presidents? Do you have any gaming or the parlor game of vice presidents right now for these two candidates?
Well, one presidential candidate thought the vice presidency was important and really took, his time to think, okay, Kamala Harris, brings me lots of benefits politically. And Trump doesn't believe the vice president matters to him at all. In fact, a vice president to him is someone who doesn't do him a favor, someone who could betray him. So I think this is just a dance and a game. And, he'll just wait and wait and wait. Maybe at the convention, maybe not. He's just going to see, and if J.D. Vance can solidify Ohio for him, he'll pick J.D. Vance. But he doesn't think this is an important decision.
Wendy, thanks for the brief, particularly on the history of the debates there. Professor Schiller is at Brown University. Red and green on the screen, there's a mix to it, but I really want to point out Dow Futures, 40,033. The market sets lower than that typically. The close yesterday, 39,908. It was a character of the move yesterday, Paul, that I found just stunning.
Yeah, I think
there's no other word for it.
Yeah, I think you're right. And the market kind of took some of that recent economic data, including the retail sales, and saying, if the Fed needs a little bit of an opening to maybe pursue a dovish move here, maybe not in June, but certainly by September, maybe some of this recent data gives it a little bit
Look
of
at
cover
Walmart
here.
today. I mean, the Chubb thing is a pop-off, Mr. Buffett, and and all that. But I'm sorry, Walmart. As you were saying, it's 2.x million employees.
It's amazing. I mean, here's
they get
a company,
a lift, and they're getting it done. Certainly on the profit and loss statement.
Yeah, exactly. And what you saw is something that Gina Martin Adams has been talking about this quarter, which is she's typically talks about margin, but this quarter she kind of shifted her analysis and said we really got to focus on revenue and see how these companies are doing on the revenue side. And that's what we saw at Walmart. Revenue came in a little bit better than expected, and they're able to manage their cost to drop that to the bottom line.
Stuart Kaiser publishing an hour ago. Citigroup, he's a bull. What's priced in ahead of NVIDIA earnings?
Right.
So that to get you out here on a Thursday, folks, into next week, it's like NVIDIA week.
Yeah.
I didn't know what NVIDIA was. But wait, let me rephrase this. I still don't think I know what NVIDIA is, but I didn't know what the name was literally until 8 months ago.
All I knew was, hey, it's good for the gamers. I mean, you need those chips for the gamers, and gaming's a good business. Now it's all about AI.
College protests, harken back to 68, but it was longer than 68. And it drifted into 1970. We're playing Neil Young today for the Secretary of State, CSNY, Ohio.
is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in that fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene and Paul Sweeney all fired up here, red and green on the screen. What a set of days it's been for conversation. Ed Yardeni yesterday with us, all of his heritage. C.J. Lawrence darkening the door in moments from I love this, from Sanford Bernstein. I mean, that's what, in the old days, Alliance Bernstein. The gentleman with the black book of economic strategy, Joe Carson's going to join us in a moment. Really looking forward to this. We say good morning. We're going to get to it quickly here on YouTube. Subscribe, Bloomberg Podcast, search Bloomberg Podcasts to get all of our good work on Apple CarPlay as well. Bloomberg Surveillance, always brought to you by BNY Mellon Insight. Let me spell it, INSITE. June 4 to 6, Nashville. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. Paul, Dow 40,000. I mean, that's all there is to it.
It's a nice round number. We like it. It's we got a market, Tom, that's moving up. I guess we had that Fed pivot, and that's still being played out here in 2024.
Joe Carson, I remember Dow 1,000. With our Bloomberg Business Flash, she does not remember Dow 1,000. Lisa Mateo.
I do not. Good morning, guys. Stocks, they are just struggling to keep up with the gains from midweek trading right now. They're looking to economic data, more Fed speak from some kind of idea where interest rates are headed. If you were tuned in earlier, you heard Jamie Dimon say significant price pressure is still influencing the U.S. economy. Could even mean interest rates will stay higher for longer than a lot of investors were expecting. All right, so we have NASDAQ futures, little change at 18,691. Dow futures, same there, little change, but at 40,000. We have S&P futures at 5,332. To the bond market, the 2-year yield at 4.77%, up 4 basis points. The 10-year yield at 4.35%, and that's up 1 basis point. To earnings we go. Got to start with Wal-Mart, up 6%. Strong revenue growth. Big drivers were e-commerce, also higher income shoppers, more income shoppers going through their doors. And sportswear maker Under Armour, down about 10%, gave a full-year outlook, fell short of expectation, and expects revenue for its fiscal year to fall at a low double-digit percentage. And finally, we have Deere, down 5%, reduced its profit outlook for the year. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. I've been telling the team he's hard to get. I mean, he's Haver Analytics. Joe Carson joins us right now. Who's Joe Carson? We had Ed Yardeni in yesterday, folks, just as one example, Ed Hyman and the rest. Joe Carson is from the old guard, and he's still writing brilliantly. See it out at Haver Analytics, iconic at Alliance Bernstein, tour duty at Deutsche Bank, among other duties. Worked at Generous Motors years ago.
Yeah, that's nice.
I think like the Pinto or the Edsel or the whatever was his fault. Joe, thrilled that you're with us today. I want to go back, Joe, to the autumn of last year, where you wrote a blistering note on nominal GDP. I would say that's been the missed call of the last 9 months. This buoyant nominal GDP of America. Is that a good nominal GDP for our listeners and viewers?
Yeah, I mean, it basically measures the amount of money being spent in the economy by both government, consumers, and businesses. And historically, that's been one of the best benchmarks to determine where interest rates are high or low.
I looked, Joe, at a recent note, and you don't mince words. I mean, Joe and the dot plot. Are you kidding me? There was never a dot plot at Alliance Bernstein. Forward guidance. You and I are on the same page, Joe Carson. What needs to be the new policy when they put forward guidance in the grave? What do they need to do as a new policy at the Fed?
Well, I mean, when foreign guidance comes out, or where they update their forecast at the end of the quarter, I think you and many other commentators, as well as analysts, only look at one thing, the interest rate. They don't talk about their growth projections, inflation, or whatever. So I think the Fed needs to rethink how they're trying to communicate policy to the general public and to investors, because I think markets, as you know, front-run the Fed. And I think it was a tool used after the financial crisis, I don't think it's any necessary to keep that type of policy in place.
Hey, Joe, we just, there's a busy week of economic data this week on the inflation front. We got some CPI that the market interpreted as allowing the Fed to be a little bit more dovish. How do you view the inflation picture in the United States these days? Oh, we might.
Oh, I think we lost him. Okay, we're having a technical difficulty there.
I think I threw him for a loop with that question.
Okay, well, we'll see if we can get Joe Carson back. If not, we got lots to talk about here. 25 minutes before a market open. I think we got to go back to Walmart as the juggernaut of the American economy. I'm on the record, Paul, is saying when I look at Walmart, I really don't understand how it's been marked up by the market to 25, 26 multiple. That is rich based on history.
It is. And again, the stock before today's trading was up 14%. Again, this is almost a $500 billion market cap company. So it's had a nice move this year to date, looking up another 6% here this morning. So I think, investors like the fact that their revenue and their same store sales came in a little bit better than expected, because I think probably rightfully so, the concern for retail investors in general and Walmart is the consumer. How strong is that consumer?
Yeah, and another thing we haven't mentioned here, of course, is John Deere. Now, I'm biased because I got the tractor with a Zamboni on the back.
Yep.
I'm out there. Deere makes a Zamboni like you can do your ice rink in the backyard with John Deere. But, all kidding aside, John Deere and Cat are about international sales in the pulse. And I don't know how to play it other than the China recovery that Dana Telsey was talking about yesterday, or Leland Miller alludes to. I'm going to say Leland Miller at China Beige Book basically says, look, it's not as grim as people think.
Yeah.
And the actions we need to see from the president of China.
Yeah, exactly. And we'll see. I mean, we'll see what they say on their call, but we'll talk to Chris Ciolino later on this morning from BI, who covers that company.
You don't get him for our show.
Don't get him for our show. We got him for the Bloomberg Intelligence show, and he'll break it down for us. But Tom, when I think about Deere, I think about the U.S. farmer. And what we've been hearing from Deere and some others is that the farmers have had a really good 2, 3, 4 years, but if you look forward, maybe not as strong. And if that is in fact the case, then you see what you see today, which is they cut their profit outlook, and the company cited, kind of weaker demand from the farmers.
I mean, from the pandemic, a bushel of corn, I believe this is $4.63. It was $3 a bushel, explodes up to $8 a bushel, and does basically a round trip. We're down to $4.63. A bushel. I don't know how farmers do that.
Since day one.
Other than I was taught by a number of people on the sell side that if a farmer has money or financing, they have one option. They have to buy another toy.
Yeah.
I don't know if that's true or not, but that's what some smart people.
That's what we've heard from Deere over the years. When the farmers have money, they invested in their business, and what that for a lot of times means buying a new tractor or new one of those big machines.
When you were at Duke, did you nail equipment leasing?
Yeah, it's very difficult. I found it very difficult, but
in the CFA program, they use Deere as the model.
Yeah,
I don't know why, but that's great. We're all got a great affection for Deere because we all struggled with it. I flunked equipment leasing accounting 3 times. I mean, they were throwing hats on the ice.
Yep.
I went down in flames, and that's part of it. The whole financing of the toys worldwide.
Yeah, and it's not just Deere. Rivals, CNH Industrials, and AGCO, this is according to Bloomberg News, also reduced their outlooks for 2024 on declining sales of farm machinery as growers continue to be squeezed by falling crop prices. There you go.
I mean, it's like almost outperforming Apple. Deere, 10-year track record. Never would I guess this, folks. Do you want to make 18% per year?
Yep.
With combines picking up wheat across Kansas?
Exactly.
I mean, it's like a tech stock.
Yeah, it is. I'm looking, and it's got a dividend yield of 1.4%. And what's interesting, you look at Deere, you can use the PGEO function and kind of see where they do their business around the world. And it is a global company. They get it's about half and half. U.S. and Canada is about almost 60%, and outside U.S. and Canada is about 40%.
Paul,
so they're global.
5-year dividend growth, 13% per year.
Yep.
Why can't the tech companies do that?
I don't know. I don't know. With those balance sheets and that free cash flow. It's all about image, Tom. I don't think they want the image.
Thank you, Joe Carson, for being with us. It was great to have him on. He's a legend. Haver Analytics writes up his research and, of course, iconic in Alliance bursting. We move from icon to icon with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Joe Biden has asserted executive privilege over audio of his interview with special counsel Robert Hur at the center of a Republican effort to hold Attorney General Merrick Garland in contempt of Congress. Garland advised the Democratic president today the audio falls within the scope of executive privilege. The White House says the GOP is being political. It comes as the House Oversight and Accountability Committee and the Judiciary Committee are expected to hold hearings over the contempt effort. The Supreme Court has ordered Louisiana to hold this year's election using a House map that includes a second, mostly black district. The ruling puts on hold a lower court's ruling that found the map to be illegal gerrymandering. Loyola law professor and former federal prosecutor Lori Levinson.
This is a much disputed ruling because, in fact, down below, there are questions about whether race should be used in redistricting and whether, in the long run, this might protect some Republican districts. As it is set forth now, many people see this as a victory for Democrats, who will be able to likely pick up another seat in Louisiana.
Former federal prosecutor Lori Levinson says the justices were acting on emergency appeals by state Republican officials and black voters. Texas officials say a barge hit a bridge in Galveston, Texas, spilling fuel oil into the water and shutting down the only road connecting Galveston and Pelican Island. Galveston County Judge Mark Henry.
The fuel oil seeping into the intercoastal waterway caused them to shut down the intercoastal waterway, so we want to get that cleaned up and get that navigable waterway back open as quick as can.
Last year, the Federal Highway Administration's National Bridge Inventory rated the Pelican Island Causeway Bridge poor. Finally, there is a 7-way tie for the lead early on in the PGA Championship in Louisville. One of the leaders at 1 under, Rory McIlroy. Americans Doug Ghim and Xander Schauffele are also 1 under. Tiger Woods is 1 over after 2. We'll broadcast live play-by-play after the U.S. markets close on Bloomberg Radio. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. We haven't talked much foreign exchange. I put this out on Twitter and LinkedIn, Paul. One of the heavyweights weighs in today from Istanbul, Barry Eichengreen of Berkeley, writing on Project Syndicate. And he does go back to the history, the romance of 1985 in the Plaza Accord. And he says it doesn't work this time in a concerted or coordinated intervention of different nations to assist the Pacific Rim, to assist Japan. Maybe doesn't work this time. He had a profound paper at Jackson Hole this summer on debt. And to see Barry Eichengreen writing up on the dollar for Project Syndicate.
Yep, looking at the dollar index right now, up slightly here again. I'm looking at the yen, Tom. Yen weaker by about 1/3 of 1%, 155.38 on the dollar yen. It's nowhere near that 160 we saw there for a short time a couple of weeks ago. But again, a little bit of weakness continued in the yen. And the question for everybody for the yen is, what's the Bank of Japan going to do? Are they going to support this currency?
Right, and into the weekend. We're getting close. Thursday. It's going to be Friday morning at 7 p.m. tonight in Japan. So you'll see what they do. And the tension's really not there like it was 5, 6, 7 days ago. Red on the screen, bull market over. Futures -2, Dow futures -19. I'm kidding, folks. The VIX, I haven't even quoted today. I'm sorry, folks. Under 13.
Under 13,
That's important. That's a Sweeney bull market, 12.42 on the VIX. From New York City on YouTube, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We see a little bit of a shift to the market as futures turn from green to red on the screen right now. So we have NASDAQ, Dow, S&P futures, little change. NASDAQ futures 18,684. Dow futures at 40,000. S&P futures at 5,330. Over to the bond market, the 2-year yield at 4.76%. That's up 4 basis points. The 10-year yield at 4.35%, and that's up about 1 basis point. What's moving the markets? That would be AST Space Mobile, up 30%, nearly 30% right now. AT&T said it's moving towards signing an agreement with the company for a space-based broadband network, and that should put it in competition with Elon Musk's SpaceX, who signed a similar deal with T-Mobile. The meme stock craze continues to lose its steam. Right now we have GameStop, down 13%. And I thought this was interesting. United Nations feeling the inflation pinch. Listen to this. Webcasts have been cut off because camera operators, translators can't get overtime. There's a hiring freeze. Entry gates at the UN headquarters close earlier in Manhattan, and the air conditioning has been cut back a bit as well. Yeah, a lot of states haven't completed paying their dues for this year. That's the reason. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, do you follow Eurovision?
No.
I don't get it, and it's ginormous in Europe, Paul.
Huh.
Yeah.
It's great. Nemo won from Switzerland, and they do like this thing. It was in Sweden. And it's like transfixes Europe. Nemo beat baby lasagna.
Okay.
Oh, boy.
From Croatia. I'm not kidding, folks. Eurovision. I bring this up because Mark Dowding, RBC Blue Bay, asset manager, of course he puts Eurovision in his note. Mark, I'm sorry, it's lost in translation to we Americans. I know you were glued to Eurovision, and you say there's a little bit of Euro tension as well. What's a tension in Europe besides the fact Nemo beat out baby lasagna?
Well, it is a bit of a joke, isn't it? But look, the truth is, I mean, this event's meant to be a bit of a love-in, a bit of a happy get-together. But this year we saw protests around Israel. We saw protests about the Dutch being excluded from the contest. There seemed to be a real political edge to what was going on. And I think the one thing that you'd observe at the moment is that all four sort of markets being relatively calm and stable in the region,
right.
It does seem that political trends are bubbling up a little bit. We've just got news today about the far-right party in the Netherlands joining the coalition government there. And so this sort of story of Europe sort of under the surface feeling a bit discontent is something we're picking up.
I mean, I look at the political soup, if you will, of Europe, including this horrific assassination attempt in Slovakia, folded over into gaming European growth for investors. Like, can I buy Nestle's or, name 15 other companies? Is there a stability to the economy of Europe right now, or is it like the political maelstrom we see?
Yeah, so I think the thing to emphasize is how the European economy has really been lagging behind a super strong economy in the United States over the course of the last couple of years. All of that said, after a very flat year in 2023, there are some signs that sort of Europe is getting a little bit stronger this year. We had a better Q1 GDP print. And it looks like the ECB is going to be front-running the Fed in terms of cutting interest rates. Everyone expects rates to come down in June and then start to drop by about a quarter point each quarter thereafter. So there are some signs that the forward-looking outlook for Europe could look a little bit better. And because European stocks are really, really cheap on a valuation basis relative to their US peers, there will be some investors who are actually sort of saying, maybe now is the time to actually look for the value in overseas stocks rather than just staying at home in the US.
Mark, I know you've had a tremendous amount of experience during your career in the fixed income space. Where globally are you seeing opportunities in fixed income these days?
Yeah, so I'd say generally speaking, in fixed income isn't tremendously cheap. At the end of the day, with yield curves being inverted, you're being paid less on longer dated bonds than you're getting on cash for the time being. And so in terms of where we see opportunities, Actually, it's more on the short side. It's on the short side of JGBs, because we think that Japanese policy is going to move towards needing to dial back on monetary accommodation. That's going to see those yields move up. So that to me seems like a very compelling view to implement. Elsewhere, I think that generally speaking, yield curve steepening is another trend that we should see more of. We're not seeing it today, mind you, but I do think that over time, the fact that fiscal policy continues to be very loose in the United States will mean at some point that investors do demand more of a term premium for owning longer dated bonds. So there are themes you can pick on that look good, that look interesting, but I would sort of characterize the overall fixed income market at the moment. It's kind of one of those points where everything looks fairly priced. Nothing's really getting the juice going, not making you too excited just at the moment.
Market trading off a little bit. Futures -2 from a little bit up green in the screen. Industrial production coming in a little soggy with a revision. It was soggy. Revision 0.4, Paul, down to 0.1 in a flat 0.0% new statistic on industrial production. CapU pretty much on script as well, but the IP statistic did move the market.
Yep, it did move the market a little bit. Hey, Mark, you mentioned the relative valuation discount for European equities versus the U.S. My understanding is that's primarily due to the lack of tech in the European market. Does that explain all of it, or even adjusting for that, Europe looks a little cheap?
I think even adjusting for that, Europe looks a bit cheap, and I think that there are sort of areas where there have been sort of European stocks that have languished unloved for a while. Take, for example, the European banks. I'd contend that the European banks are probably in better shape than the US banks, particularly the US regional banks at the current point in time. But actually, European banks that struggled to make any profits for years and years because interest rates were below zero are currently enjoying a nice sort of run of profitability. And yet you look at sort of the price to book ratio for the European banks, you look at big banks on multiples of 6, 7, 8, they look pretty cheap, I would argue. So there are certainly pockets of undervaluation, things that do look a bit cheap, I think, compared to their other peers.
Mark Downey, got to be quick here. Sorry for that, but I want to come off of James Dimon's interview today, J.P. Morgan, with Francine Lacroix. And one of our good people out on our live chat out on YouTube has a really good observation on Europe, lower taxes, open up investment corridors. Do you predict that London will have legitimate competition from Paris and Berlin and others because finally you'll get a lower tax regime in Europe and in France?
So in brief, I'm not really seeing it. I'm not that convinced. France is a country that likes to spend fiscally. It likes to have higher taxes. So I don't think London should be left behind in that context. And we have the benefit of the language, of course, that we came up with. And so London has its definite advantages. That's not to say that this country that I live in isn't going through a bit of a tough time of it at the moment. I think that there are challenges since Brexit, and we still haven't dealt with it.
Yes, Mark, we call that Tottenham. Mark Downing, thank you so much. Greatly appreciated. RBC Blue Bay Asset Management. Did you see the Tots? I mean,
did not. Are they still in contention here?
They're like the Maple Leafs. They haven't won, since the Nixon-Kennedy debate in 1960. But I mean, I'm not as sophisticated as this, and Farrow doesn't give me any love anymore on this.
No.
What an ugly 48 hours for the Tottenham Spurs.
All right, Tottenham, they're 5 in the standings. That's not so bad.
They're number 5, but it's the way they lost to Man City, and there's all this whining stuff. I don't get. It's like Premier League football. Farrell gets this. I don't get this.
It's Man City top, then Arsenal, then pretty big drop down to Liverpool. So it's Man City and Arsenal kind
of.
The
coach of the Tots is hysterical. I don't. We're gonna have to drag. I think we need more soccer talk. We need to bring Farrell in and dissect the failure of Arsenal to take out Man City. Come on, Rich, what do you think? How about if we trade 3 minutes of Premier League talk for 4 minutes of Rangers talk? Let's go Rangers. Thank you. That's good. We'll do that. We need to get the market open to save the conversation here. At Bloomberg Surveillance, we're on Apple CarPlay, Android Play, Bloomberg Business app. It's free. On YouTube, many questions. Subscribe to Bloomberg Podcasts. Search Bloomberg Podcasts. And there we are with Lisa Mateo. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So we had some more economic data out today for investors to kind of soak in. They're looking for a read on where interest rates are headed. Initial applications for U.S. unemployment benefits. They fell last week. New U.S. home construction rebounded in April by less than forecast. And the May Philadelphia Fed Index, well, that trailed estimates. So let's see how the markets react a day after the major averages closed at records. The S&P 500 right now, that's little change at 5,311. The Dow is little change as well as 39,937. And we have the NASDAQ, same thing, little change, but at 16,744. To the bond market, we have the 2-year yield at 4.77%. That's up 4 basis points. The 10-year yield at 4.35%, and that is little change. Quick check of commodities. We have spot gold lower at 2,377 an ounce. Copper continued setting new records. And then we shift to oil, rising for a second day. Brent crude $83 a barrel. WTI crude $79 a barrel. At the open, got to check in with Wal-Mart. They're up 5%. Strong revenue growth there. That is your Bloomberg opening bell report.
Lisa, you're burying the lead. It's a moment for Sweeney. When watching the open, the market pops. It's doing fractionally better than what futures were doing. And, you know, we got up intraday 39949 on the Dow Jones Industrial
Getting
Average.
there.
We're getting, you know, it's like, you know, Lisa's going on about oil and bonds and, you know, Dow 40. I mean, Lisa, you have to remember in our youth, during the Carter malaise, I honestly can't remember the number, but Paul, the Dow was stuck at 700, 800, 900 for like a lifetime.
Exactly.
I mean,
here we are pushing up 40,000. We blast through those 10,000 point moves like it's nothing.
Dow up 30 points, 939. We'll bring you that headline when we see it. Subrata Rajappa does not care. She's with rate strategy at SocGen as well. Subrata, what does the bond market tell in the equity market right now?
That as long as yields stay low and the Fed is biased to ease, then it's game on for risky assets. So broadly speaking, I think that you're looking at an environment where the Fed is biased mostly to either be on hold for as long as they need to while they wait for inflation to normalize or cut.
Right.
So Powell's basically, pivoted away from hikes into cutting. So I think that that's generally good for risky assets.
Did we get a great signal yesterday when the inflation-adjusted 10-year yield, the real yield, sort of broke out of the range and worked to a more accommodative, lower statistic of 2.04%? Was that a seismic move for the real yield, or does Subrata Rajappa need more information?
It wasn't a seismic move in real yields. If anything, I think we're still very much in the range that we were in for the last few months. For the most part, I think that we know that higher real yields have an impact on the broader economy. And if anything, the price action in the last 24 hours after the CPI with the decline in Treasury yields leads me to believe that, the easing of financial conditions that followed would mean that the Fed would have to stay on hold for a lot longer than people anticipate.
So, Subhadra, when you talk to your traders and you talk to clients, how did they put yesterday's CPI print, which was a little bit, cooler than expected, versus January, February, and March, which on the margin were a little bit more inflationary? How do you put that together?
So it's definitely a relief for investors that were looking for inflation to continue to cool off, especially after 3 hot CPI prints earlier on in the year. I think getting a 0.3 on headline as well as core CPI was definitely viewed very positively. The question is whether we see this disinflationary trend continue over the next few months. And you're going to need to see that on a consistent basis for the Fed to feel comfortable about adjusting policy.
All right, putting all that together, I'm looking at the 10-year today, trading at 435. We were at 4.5 just a day or so ago. What's your year-end call for the U.S. 10-year?
So we expect perhaps a further decline in Treasury yields as we head towards the election, especially the 10-year could get to around 4% or even lower, because you're going to see this sort of bid to quality heading into the elections. But beyond that, I think once we get past the elections, we have a lot of precedents for 10-year yields to rise meaningfully. The market will start focusing on the trajectory for debt and deficits. So we see the 10-year ending the year around 4%.
Oh. I mean, you see the 10-year yield at 4%, you said?
Yeah.
Okay, well, this is incredible. I mean, basically, do you load the boat on fixed income now? So, Brad, it's a slow news day. Help me here. I need to make some news. I mean, do you load the boat on fixed income now with that kind of call?
I think there'll be an opportunity to go along the front end now, given the fact that 2-year yields are as high as they've been in a while. I think the bias is going to be towards lower yields when the Fed starts to cut rates. The market, I would say, broadly speaking, especially the real money community, has been biased long in an environment where the Fed is looking to cut. The question really for the long end is that, will you see enough of a rally to justify being long the very long end, or you're just going to be sitting there and collecting yields or clipping coupons?
Paul, I can't fathom the real estate turmoil. I mean that in a constructive way. If we get a Subrata Rajappa, Ian Lingen call, I mean, people aren't going to adjust their housing call or rental call back to the low rates of X number of years ago. So we're going to go from a 7.4% mortgage, where 6.9, it's 5.9.
Yeah, I'm sitting right at 6%.
There's a point where it's going to go mental.
Yeah, it is. I think for a lot of people today, a 7
It's
handle
CFA talk, folks.
Mental.
Go mental.
So, it's interesting here. I'm just kind of wondering, again, kind of looking at the yields here. When you talk to clients, are they concerned about an inverted yield curve? Like when I saw the yield curve inverted, I was taught in business school that means a recession. That rule doesn't seem to be playing out here. Does the inverted yield curve, is that even a discussion point anymore?
Not really. I think people have pretty much ignored the signal that's coming from the inverted yield curve. The focus is all on the fundamentals, and there's really very little in the data that would suggest that we are anywhere close to a recession. I mean, you look at growth, you look at the resilience of the consumer. There's just not much in the data. But to the point that Tom was making earlier on, the impact of higher interest rates is not just something that the housing market is concerned about. My conversations, I would say, with corporate clients are all, centered around this concept of higher for longer. Do they need to recalibrate the way they look at the markets?
Right.
Do they need to think differently about how they're issuing, along the curve, if yields were going to stay higher for longer? And that's really a paradigm shift in my view.
Subrata, thank you so much. Subrata Rajappa, she's with SocGen of Paris and New York and London as well, I should say. Green on the screen. Let me give you levels. 39,925 on the Dow, 5,313 SPX. Did you see Brian Belsky lifted up at BMO Capital Markets?
I saw that, yeah.
He, I don't know where he went. I can't keep sort of 5,400.
I'm seeing that across the street. These strategists are forced to raise their estimates or their forecast or, start making some downgrading calls here.
Okay, what's been the biggest underperformer psychologically in the world? Apple.
Yeah.
Okay? From a cup of coffee the third week of April, Dan Ives wore black one day. He was so upset at the stock performance. It's up 15, almost 16%.
Yep.
It's gone from 165 to 190. And Paul, it's like 4 or 5% from a record high.
Yep.
And to me, that's the clarion call here to get to the June meeting, worries about China, who's going to be there after Tim Cook, worry, worry, worry. And one of the big worries on the streets seems to be getting, because a $100 billion share buyback, that helps out.
That helps.
That helps.
But I think, as you mentioned, Tom, this developer meeting, which are always big for Apple, it's oftentimes where they will introduce a lot of new stuff. But this one's going to be particularly important because it's really an opportunity for the company to say, here is our AI play. They may announce that, they may not.
But they may say, we're going with Google. I mean, that could be the announcement.
Yeah,
We're going
and I
with
think that's kind of
OpenAI.
what's lifted the stock when you listen to the Dan Ives and the Mandeep Singh.
Yeah, Ludlow pulled an all-nighter out in San Francisco because everybody's leaving AI. This guy's leaving, this woman leaving. there's like 5-6 executives at OpenAI walking. That can't be. Apple doesn't want that.
No.
I mean, they don't want people walking out the door.
No.
I mean, it'd be like, could you imagine?
Especially since they have that new headquarters out there in Cupertino, which is unbelievable.
Have you been there?
No, you see it from the 101 as you're driving down.
See it?
Yes.
It looks like a space saucer?
Yes. Same thing you see Facebook from the 101. But 100,000 employees for Apple.
Yeah, well, nothing compared to Walmart. Futures, not futures, we're up 8 Dow points right now with our news. In New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The Justice Department informed House Republicans today that President Biden has formally asserted executive privilege over the audio of his interview with Special Counsel Robert Hur. The White House counsel writes in a letter to top White House Republicans, or House Republicans, quote, "Your likely goal is to chop them up, distort them, and use them for partisan political purposes." The interview is at the center of a Republican effort to hold Attorney General Merrick Garland in contempt of Congress. It's going to be debate summer in Washington, with President Biden and former President Trump agreeing to face off against each other twice this year, well before the usual debate season in late September and October. Bloomberg's Jody Schneider has more from Washington.
I think part of this was the strategy of the Biden campaign to not look weak. Donald Trump's been trying to taunt him, saying, "Oh, he's too, frail to debate me, to withstand, a long debate." But the campaign, both campaigns are trying to look tough on this.
Bloomberg's Jody Schneider in the nation's capital. More cross-examination for the former president's former fixer. At the criminal hush money trial in New York, lawyers for Donald Trump are expected to hammer at star witness Michael Cohen's credibility when his testimony resumes any moment now. Slovakia's deputy prime minister says Prime Minister Robert Fico is expected to survive after he was shot several times in an assassination attempt in Handlova. The attack began against the pro-Russian leader as being called politically motivated. President Biden says the U.S. is ready to help the Slovakian government. State Department spokesperson Banat Patel.
This attack is incredibly alarming, and we completely condemn this horrific act of violence and are hoping for a swift recovery for the Prime Minister. Our embassy has been in touch with the government, and we stand ready to assist.
A 71-year-old suspect has been detained. Finally, round one of the PGA Championship started this morning at Valhalla. Xander Schauffele, Doug Ghim, and Victor Hovland all tied for the lead at 2 under. Talking about the Tiger. Tiger Woods is even after 4. By the way, we will broadcast live play-by-play after the U.S. markets close right here on Bloomberg Radio. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Where's Damien? He's not on the course now. It's raining today.
He might be down at the PGA. You know how he is.
But like seriously, the greens are different. I mean, a green in Marion in Ohio or at Oak Hill up in Rochester is a whole different grass than Louisville, or dare I say Pebble Hill, or something down south.
Or Augusta. The greens are different. It's different kinds of grass.
Yeah, different parts of the country, different grass grows
You think
better.
John Calipari has tickets to Louisville?
Boy. Oh, yeah.
You think so?
Yeah.
I don't, maybe not.
That part of the world, they have some good. They got the Kentucky Derby. They got a lot of good golf courses
this has
down
been
there.
a great month.
Good
And this is round
basketball.
one, right?
This is round one, early round
Tiger
one.
is even through 4 on the Tiger Watch.
Yep.
That's all I care about.
And they got to cut off. They got to cut off tomorrow afternoon. Only so many people get to go. So the goal is to get Tiger to get to the 4 rounds.
We got to get him in the cutoff.
That's
so.
right.
For the TV partners.
Are you doing our play-by-play on this? Can you
well-
see Lisa Mateo?
Yeah.
And he's lining up now in the 15th hole. I could see Lisa.
Lisa down.
Lisa Mateo could do some play-by-play. She'd be killer.
I would be terrible.
Lisa, give us some play-by-play golf right now.
Some play-by-play, and there he goes as he gets ready to go. And here he comes. Everybody's waiting in anticipation. And there it is!
There it
Oh,
is!
what?
Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. The major averages struggling to pick up much traction. Traders looking through more economic data. Also, we're getting more Fed speak. So right now, let's get to it. The NASDAQ, little change at 16,755. The Dow at 39,892. The S&P 500 at 5,312. Over to the bond market, the 2-year yield at 4.78%, up 5 basis points. The 10-year yield at 4.37%, and that's up 2 basis points. Now, we told you Wal-Mart having a good day, but sportswear maker Under Armour, not so much. Their shares are down this morning about 0.8%. They're under pressure after missing estimates. And then you have Deere reduce its profit outlook for the year. Deere shares, they're down about 3%. And finally, Chubb, they're up 4%. Warren Buffett's Berkshire Hathaway unveiled a $6.7 billion stake in the insurer, so that's giving it a boost. And this story coming across the Bloomberg, UBS Group considering moving up investment bank chief Rob Karofsky to lead its entire U.S. business. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. I greatly appreciate it, Lisa. Oliver Chen publishes Exquisite on Madison Avenue and Luxury, and of course does Big Box as well. Paul, there's one single statistic within the Oliver Chen rebuy on Walmart. Digital growth up 22%.
Every quarter.
You know, like it's got bright red flashing lights. It's only Oliver Chen would do around.
And Tom, it's not just a one-quarter thing. They do that every single quarter. They have figured out, and this has been for several years, by the way, they have figured out how to compete with Amazon.
I'm going to see, and I give Oliver Chen and others, Joe Feldman, Dana Tulsi, others in the game, I mean, like 800 people follow Walmart.
Yeah.
But I give them immense credit that fancy people are like, oh, Walmart, I'd never walk in that store. And I'm sorry, these are amazing concepts.
I'm going to go into the Walmart this Saturday on Route 70 in Brick Township, New Jersey. I'm going to check it out because I haven't been to that one, and it is
Sure?
massive.
You're going to go, okay.
Yeah, because I want to see how the whole grocery store thing, like how that fits in with like the other stuff. Do I go buy some carrots and lettuce and then go to aisle 7?
No. You go buy 8 pounds of beef or
8
something.
pounds? Okay.
You do, all in one cart.
Cheap.
All right.
Joining us right now, I got to give you some history on this. Back long ago and far away, you would sort out the firms and what they did. And in portfolio management, which everybody was trying to do, it was sort of like the nascent 401k and what are you going to do with your money? Prudential took the high ground. They invented it. Phil Blancato was there with Prudential. And I'm just going to say simply, they won at telling people how to diversify but not over-diversify, how to buy bonds, 60-40, but don't do like a formula. What was it like at Pru back then? I mean, you guys got it right. What did you do at Pru that the other firms didn't do?
No, it's really easy. We bought in the fee-based business and the advisor as portfolio manager very early on. So we helped the average advisor be a really good portfolio manager.
Right.
We moved away from commissions in the really classic wealth management at its beginning. Right. And we won it. We won it clearly.
I had goosebumps. You're here because now's like a totally different world. I hate Target. What are they? Target defined, age defined, retirement. There's all these marketing gimmicks.
Yeah.
What's the Phil Blancato reality of running a portfolio where Will Danoff up at Fidelity has 53% of his portfolio in 10 stocks? So how do you approach portfolio management now for mortals?
You know, the reality for me is I get to manage money for Main Street. We have today $7 billion in excess of it, thousands of accounts. So what do? We keep it really simple by avoiding the easy things. For me, we don't own Europe. I don't have to be in just 10 stocks. We're able to do the right thing by really focusing on where the growth is, getting people in that classic 60-40 real rates of return.
So 60% NVIDIA and 40% Microsoft?
Now when the valuations are 70 on a PE, that scares the hell out of me. No, I own mid-cap stocks. I've done well in mid-growth. I've done well in large value by clipping a 2.5% dividend. Hell, I'm all about buying fixed income right now. We have upped our ante on fixed income to a point where we're 10 years plus on duration, getting a 5.5% yield, just waiting for interest rates to be cut.
That's like the Sweeney method.
Yeah.
And the reason why is I got to make sure mom and pop who have money with us aren't hurt. My rule number one is, and I learned this at Prudential, is we'll win consistently year after year by just losing less. So I like the idea of using derivatives in my portfolio. I like hedging the downside. And in that environment, environments like this are golden for me because I don't have to bet just on those 10 stocks to win. There's other places I can make money besides that.
How about ETFs? How do they fit into? Because when we started in the business, there were no ETFs to speak of. Now, that seems where all the money is going. How do you?
Well, 34 years from me, right? So I was on the floor when some of the first ETFs by then Barclays Bank, which got bought, obviously BlackRock, and that spin out years later was beginning. And I early on believed that this was going to change the whole narrative around mutual funds, and it has. Yeah. Active ETFs are the future. So when you watch this money coming in, there's three reasons why. The cost. Obviously, the capital gain effect is powerful, but then the ability for a portfolio manager to have transparency in an ETF and deliver an active bond or an active ETF portfolio with stocks in it is powerful.
Wal-Mart all-time high hitting today. How about that? What do you think about this market right now? What are you telling your clients today about this market? Because the economic data that we see on Wall Street, pretty good, but the average person out there probably doesn't feel it.
That's a very important point. If you look at a basket of groceries in 2019, it cost $100. That same basket is $137 today. So for me, I'm concerned about this market. I think valuations are very stretched on the 7. The other 493 are trading at a 15.5, 12-month PE. That's a good number. So I would strongly suggest go buy the dividend. Wait volatility out. Up volatility is dangerous as well as down volatility because you're winning on a handful of stocks. Own the dividend, extend your bond duration, capitulate here. Remember, August and September are worst months of the year. Going into election are even worse. Batten down for a little while. Let's see where we are on the other side of this election.
What's your portfolio turnover rate? I mean, if you're running long only buy side, are you running like 16%, 10% portfolio? Or are you
about 30%.
Really at 30%? Yeah. So you're working at it.
We are. I don't think fee-based asset management, back to my Prudential days, gives us the chance to adjust portfolios based on what's happening.
Are you making 3% a year?
Oh, we're making a lot better than that, depending on...
No, I meant the fee. That's
no,
a joke.
No. I'm sorry.
What are ETF? What it's medicate them, Lisa.
I wish that 3% is low, guy.
What are you doing with fees with the ETF? Belchunas comes in here. What are they doing? 19 basis points. Yeah. I don't get it.
You work for 20 basis points. You work for 20 basis points.
You're making 20 beeps in equities.
That's it. You have to, Tom. And the world's changed.
I'm the luckiest guy on Wall Street, Paul. That's what I know.
Size matters. Size. In the end of the day, we have to get to scale, but we cannot lose who we are. You got to have a personal approach. You got to do podcasts. You got to reach out to people. You got to make them feel comfortable that you're shepherding the guy on Main Street, the girl on Main Street who's got $1 million IRA, 401k. That's my job. And for us, it's critical we do it cheap. We're transparent, and we deliver risk-adjusted returns that are fair. We're not.
How much cash do you have right now? Sweeney wants to know.
I'm gonna provoke you on this one. 0. I'm 2%. Why? Because I pushed out the bonds out. Plus, I'm 10 years or more. I'm gonna win. Every single time the Fed has cut rates, the bond market's up double digits for 5 years. I'm going to win on that.
How much credit risk do you take? Do you stay in the treasuries or do you go out and
I'm mostly treasuries with a dividend. The corporates, I don't touch high yield. There's no need to reach for it. The spreads are just too tight. Why would you do it?
Right.
I get plenty of income by being safe. It's a risk-free trade. Even if rates push higher, I don't lose. I'm getting a 6% coupon. I don't care if I lose to the upside. It doesn't matter.
Somebody comes in, they've got their 401k going, they got some wealth, they own some Magnificent Seven. Do you sell those shares?
I sell a portion. I want you to own more value than growth here. I want you to take down that allocation. Let's assume it's 100% of your portfolio. I want it to be 50. Why? These stocks are priced to perfection. I don't care that NVIDIA's got tremendous growth, but you just can't get there with it anymore.
This has been wonderful. Phil Blancato, thank you so much for the SAIC. And, we don't talk enough about this. Like, what do you actually do with your money?
Yeah. And for the person who's got that 401k.
Triple leveraged all cash. I'm popping 16% gross, 2 and 20 payout, net clean 9% after my fees. That was fascinating. Phil, thank you so much. I'm going to do a shout out to the Secretary of State of the United States of America. I think a lot of people saw him playing in a bunker in Kyiv and said this was just a photo shoot. Paul, he can play.
That's what I've been
told. You can tell. But you see how somebody's holding the pick in their right hand, and where his thumb is around, in this case, he had a knockoff Gibson ES35 playing left-handed. And I'm sorry, the Secretary of State can play like he's a player.
Yeah, that's what
it wasn't like some
good,
contrived photo shoot.
You're the expert.
And if I'm Neil Young, I'm like calling him up on his way to the Smithsonian saying, Neil, stop by with the Secretary and do it right. Rockin' in the Free World, this by Secretary of State Blinken. Good morning.